voting members and the dot plotters incorporated future policy, which is very rare because we never hear that from the Fed. We never hear that they're chasing the puck of what policy might be. So the Fed is baked in already in the dot plot and its communications that it's expecting a more difficult path for inflation. The market has priced it in. And then on the policy side from the upcoming administration, we're going to have tariffs on everything front and center, even if they are a negotiating tactic, because you need it for the negotiation piece.
We should
and
say
you put
this
the two
makes,
things together, it creates anxiety in the bond market.
It makes the Fed minutes a little bit more interesting later on this afternoon.
That's right. That's right. So we'll hear perhaps who and what and why, but I will say that the incorporation of future policy as yet unknown is very unusual, and I think we should just take all of it with a little bit of a grain of salt.
What are your trade assumptions right now on tariffs? We've had conflicting reports from the Washington Post. We've heard from CNN this morning. I'm struggling to find the news in some of this. The president himself has said that it's all fake news, that ultimately he's got a big job in front of him and he wants to get it done. What are your underlying assumptions?
Our underlying assumptions, which is why we're still bullish, is that the China tariffs happen, and they'll probably happen right away, and that rest of world will be a negotiating tactic, but will sound very ugly, and it will sound as if it's not great for the inflationary picture for the U.S. In the end, I think what we have to keep in mind that there is a Fed put and there is a Trump put on these markets. And we know that the upcoming president cares very much about the performance of the market. And he was elected because of inflation. And he's got some serious folks in the Treasury Department, and I think we have to remember that. So as the bond market is pricing in anxiety about what policy might be, or the better than expected growth, so a no landing rather than a soft landing scenario, this economic team is going to have an eye on inflation. So it's not just the bond market and investors, it's the administration as well.
It just feels as though you're in the market buying pretty aggressively at a time when everybody else is finally feeling a little bit of fear for the first time in months, maybe even years. Is that the case?
I love fear.
Okay.
We love fear. I mean,
all right.
You know, we don't want to be here and all be on the same side of the boat. Like, we know that is the worst place to be. So I welcome the conversation that there's a two-sided trade. What do we know? We know we have an administration that's going to cut regulations, that's going to keep corporate taxes low, keep the individual taxes low, and has unleashed small business optimism. That's what I know. Earnings are meant to be double digits. We have a very rich multiple. I'll give you that. But if earnings are in double digits, we should have a positive year this year in the S&P, and our estimates reflect that.
Just how contrarian are you? Russell 2000?
That's a tough one.
Well, I was just wondering, what kind of fear are you buying into right now?
So I would say this. I think the giving up on rest of world and the giving up on the small cap, again, is the one side of the boat trade right now. And we would welcome, you know, getting a little bit more exposed to these areas. You know, we did not follow the small cap wave last year because we felt that rates were ultimately going to stay higher, and that's very difficult for the constituents of the small cap world because there's no earnings growth there. So the small caps really need a change in Fed policy. So we didn't follow that. I'll say this. There's such disenchantment with the small and mid-cap space, and there's such disenchantment with rest of world with the strong dollar. That's when it gets interesting. You know, we have to be contrarian on some level, and so I think that's where we'd be, that's where we'd be a little bit more open. The whole world hates it. Maybe we want to go to the other side of the boat.
Alicia, you talked about the fact that the negotiating part of all of this with Trump is going to sound ugly.
Right.
Amidst all of that, is there a concern that even if it's just language and threats, there could be economic deterioration from it?
I think we've seen some of that. I think some of what we've seen in the data is pre-buying before tariffs hit. I think some of the negative data in Europe is because of pricing in a more difficult trade environment. So yes, it will have real-world consequences. I think ultimately, though, if you look over the space of 12 to 24 months, I don't think tariffs at the border are going to happen because it's going to threaten the entire economic agenda.
How insulated is the United States? Are there negative feedback loops from the rest of the world? Chinese growth is struggling. Chinese yields have fallen off a cliff, reflecting that. We're looking at the struggle play out on the debt side of things in the UK. That's going to constrain them. Constraints across the board in Europe on a whole range of issues. Is there any kind of feedback loop into the US economy?
So it's really interesting because in some ways, the real economy, the US economy, is something of an island. And we learned that in 2018 with the tariffs, which seemed so shocking at the time and actually did very little to affect the US economy. The equity markets, on the other hand, are exposed to rest of world. And so, you know, you need the rest of world not to be in recession to have the S&P hold up. So the real economy is an island, the S&P is not an island. And we've always talked about the fact that the equity market is not the real economy. You need the economy strong enough to provide earnings. And the S&P, of course, is much more manufacturing based than the real economy is.
Yep.
So if you have a reignitement of manufacturing in the U.S., an acceleration of reshoring, it should help earnings in the manufacturing sector as well. And we saw it with the ISM numbers, you know, new orders above 50 for the second time in a row. So that's really great. It tends to be an arbiter of future S&P earnings because the index itself is more exposed to manufacturing.
ADP up next. Alicia, well framed. As always, it's good to see you.
Nice to see you guys.
Thanks for catching up with us. Alicia Levine there of BNY Wealth with an update on stories elsewhere this morning with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. OpenAI rival Anthropic is said to be in advanced talks to raise $2 billion in a funding round, giving them a $60 billion valuation. Our sources say that Lightspeed Venture Partners is leading that round. Amazon also said in November it was investing an additional $4 billion to boost its stake. Indonesia has decided to keep a ban on the sale of Apple's iPhone 16. Apple had announced a $1 billion plan in the country that included building out an AirTag factory, but Indonesia said that that was insufficient to meet local investment requirements. The government is willing to negotiate with Apple, but may impose sanctions if the company does not comply with those local investment rules. A familiar face is emerging as the candidate for the next head coach of the New York Jets. Rex Ryan interviewed with the team on Tuesday after lobbying for the job in recent media appearances. Ryan coached the Jets from 2009 to 2014, winning 50 regular season games and coaching the Jets to their most recent playoff appearance in 2010. He's the third known candidate to interview so far for the job. And that's your brief, John.
Make Halarian the fourth.
I was thinking that.
Make Mohammed the fourth. Why
Can you
not?
imagine? I mean, I could see it in addition to everything else.
He was against the Aaron Rodgers move. Turned out to be right. You know, Mohammed's got a good read on these things.
Hold on a second. So he's going to be coaching the Jets. He's going to be running the Fed. What else is he going to be doing? Let's just get this on the table.
Join this program.
On Friday. He'll be here, so we can run all this by
Friday
him.
morning. Watch out. Up next, the Morning Calls Plus, George Gianarikas of Canaccord Genuity on why he's still bullish on Tesla despite recent setbacks. Before we get there, an ADP report just moments away.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The ADP report out just moments ago. Bit of a downside surprise. Mike McKee has the details. Morning, Mike.
Good morning, John. ADP would see a disappointing result on Friday. They see 122,000 jobs created during the month of December. That's lower than the 146 they had originally reported for last month. We're looking for the revision on that. It's lower than the 140 that economists anticipated. Right now, they're saying that private sector jobs, which is the 122, are much lower than anticipated by the Bloomberg consensus for Friday. The service providing jobs, according to ADP, 112,000, goods producing only 10,000. So a rather weak report from ADP. We'll see what we get on Friday.
Mike McKee, thank you, sir. Helping to put a lid on this bond market sell-off, at least for now. 10-year yields now well off session highs, up by just a basis point and dropping just below 470 on a 30-year yield. Been very focused at the long end of the curve, levels we haven't seen for quite a while on a 30-year. Yields are up by 3 basis points still to Lisa around 495.
This really goes to the point that Andrew Hollenhorst is making, that even though you're not necessarily seeing the layoffs, you're not seeing the hiring. And that's the reason why people are saying, wait a second, maybe things aren't running away with growth and inflation for a hot second, but still not making a dent, because ADP doesn't tend to portend much for payrolls that come out on Friday.
Well, we can talk about the big one on Friday. 163 is the estimate. Andrew's at 120. Andrew basically suggested to us that the more important data point was unemployment. Unemployment in our survey is expected to stay at 4.2%. Andrew thinks it climbs to 4.4. And if we get a move like that, Mike Schumacher over at Wells Fargo, and we talked about this a little bit earlier, he thinks you could have a yield move the other direction, in the other direction of as much as 20 basis points on a single day. So stay tuned Friday for some big moves, maybe.
You know, this goes to the point of Bill Dudley, which is how much is this an issue with Fed communication? And it raises the point of the minutes that we get later today, because the Fed keeps reiterating we are not data point dependent. So ostensibly, they shouldn't necessarily completely shift their call on one payrolls report, and yet the market is moving as though if you get a 4.4% unemployment rate, you could get a rate cut as soon as later this month.
Equity market on the move, improving just a touch. We're down by a couple of tenths of 1%. The opening bound 1 hour and 12 minutes away. Let's get you some morning calls. First up, Wolf Research upgrading UPS to outperform, expecting a positive margin inflection this year. Next up, TD Cowen upgrading Coca-Cola to buy, citing more upside in international markets over the long term. And finally, HSBC downgrading AMD to reduce from buy, pointing to competition in the AI GPU market. Their stock is lower by more than 2%. Let's turn to tech. Tesla down over 8% since the start of the year as weak sales and bearish sentiment weigh on the stock. Despite the automaker's recent turmoil, George Gianarikas of Canaccord Genuity maintaining a buy rating, writing Tesla has a generational set of growth opportunities ahead, including EVs, autonomy AI, energy storage, and robotics. George joins us now for more. George, welcome to the program, sir. Good to catch up with you. Deliveries in the past week or so. Are we playing down the importance of them, just saying that things elsewhere are better than expected? Why would you ignore those?
Well, first, if you look at the delivery cadence or the year-over-year growth cadence in 2024, the stock sort of magically bottomed when the year-over-year growth rates bottomed in the first quarter of the year. You look at the next few quarters, that year-over-year growth rate improved. And what's important for the stock, super important for the stock, is that we expect that year-over-year growth rate to continue to accelerate into 25 and to 26, mostly based on new products. Elon Musk has promised investors new products, hopefully sooner rather than later. That should impact the fundamentals probably in the second half of the year and into 2026. So what we've decided to do is be forward-looking and look at the year-over-year growth rates that have really impacted stock performance for the last several quarters.
How much, George, does the potential for deregulating some of the parameters around full self-driving technology really underpin the reason why you have a buy on this?
It's very important. So Tesla's FSD, full self-driving, has had not that great take rate so far. And take rate basically means if you buy the vehicle, are you going to opt to pay the $8,000 to get their full self-driving? Now, their gross margins have been terrible for the last couple of several quarters because they cut prices. So what we see into 2025, 2026, 2027, and beyond is an improvement in those take rates. If you pay attention to what's happening on the internet, people are very excited about FSD version 13.2. So as people hopefully increase their penetration and their take rates of that full self-driving software, the gross margin should get better, and therefore the product becomes more sticky. And so what we've called Tesla's strategy, at least with its current vehicles, is a razor blade. You sell a bunch of vehicles, and over time, each one of those vehicles has a potential to upgrade the software and have very high margin take rates for FSD in the future.
Some stocks are stories, and Tesla is one of those stories. And so I'm curious about the parameters of this story for you, George, in terms of, say, 1 year, 2 years out. What do you envision in terms of the way we drive, whether we have basically self-driving taxis that pick people up and that a lot of people don't have driver's license anymore? Can you give us a sense of what your time frame is for a full transformation of our imagination with vehicles?
So as a father of 2 teenage girls, I am incredibly excited about a future where they don't have to drive. So first and foremost, we are very bullish on the long term of autonomy, and we cover several stocks in the space, including Tesla, Mobileye, another company called Aurora. And we think that each one of those has the potential to be wildly successful, but for different reasons. Tesla has decided to take on a camera-only neural network approach that is costing them tens of billions of dollars. Aurora is in Class 8 trucks, and Mobileye is also trying to be what we call the Android of autonomy. We see a future, to your point, where people don't have to drive as much anymore. It'll happen progressively. It's not going to happen all at once, but we think that unleashes productivity from a passenger vehicle perspective, and from a Class 8 trucking perspective, it increases resource utilization. Trucks are able to travel 24/7 mostly, decreasing shipping times. We see full self-driving or autonomy broadly as one of the generational investment opportunities that are ahead of us. It's one of the most exciting tech opportunities over the next 5 to 10 years. And if you listen to NVIDIA yesterday, Jensen's CES speech, he said exactly the same thing.
George, I got to say, you sound like my dad, who refuses to get in the car if I'm in the driver's seat. But this sounds all rosy and exciting, but 2025, there's a lot of risks ahead. EV tax credit, and of course, what could happen with China, especially when it comes to a potential tariff policy, new regime from the incoming Trump administration. How are you thinking about that amongst your very rosy outlook for Tesla?
You're totally right. So EV tax credits are a risk. China is a risk. It's a wild card. We have no idea how that'll impact Tesla, really. And that was in 2024, we calculate about 37% of their deliveries. So lots of unknowns. But what we're counting on to help re-accelerate that revenue growth are new products. And Tesla has a tendency to deliver new products that are very exciting. To the extent they introduce them sooner rather than later, which we expect, and they start to really positively impact the P&L in the back half of the year, those are idiosyncratic things that can help Tesla buck the trend relative to whatever happens with EV tax credits in the US, and hopefully any marginal decline in China, if that happens.
George, can this multiple survive in the face of 5% interest rates?
It's a great question. So what we comp Tesla to are some of the large cap tech peers. So we looked out to 2027. We saw, many of them or all of them collectively trading around 23 times 2027 earnings, and they're growing at half the rate, if not less than half the rate of Tesla, right? If you look at earnings and EBITDA. So if Tesla's going to grow multiples of that and continue to grow multiples of that based on opportunities in autonomy, energy storage, robotics, we think it deserves a much higher multiple. So really depends on what its comps trade at, but its comps are trading at healthy multiples too. So it deserves to trade at a higher multiple given what we see as better growth prospects.
Appreciate your opinion this morning. George, thanks for your time. George Gianarikas there of Canaccord Genuity on Tesla. The bond market just pairing losses a bit, yields off session highs. We had this from Governor Waller a little bit earlier this morning, speaking moments ago, saying that tariffs are unlikely to impact his view on monetary policy, doesn't expect tariffs to have significant impact on inflation, and will support rate cuts in 2025 if the outlook comes in as expected.
So to me, he wasn't one of the people who were putting this into their forecast. I wonder how that sets him up politically going forward.
I'm not going to question his intellectual honesty. I would say perception matters, and some people might perceive this as an individual setting themselves up maybe for a vacant seat on the FOMC in a few years to come.
Yeah, is that 2026? Maybe.
They'd call that an audition.
Perhaps. Watch this space. Jobless claims up next from New York City. This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Initial jobless claims data just seconds away. The estimate in our survey is 215. The previous number is 211. We'll get the number in just a moment. Going into it, the scores look like this. Equity futures on the S&P 500 just about unchanged. Likewise on the Nasdaq, recovering from losses from earlier on in the session, driven by lots of different things. You can point to a headline from CNN, or you could point to the bond market and see the moves there. Let's check out the bond market just briefly. 10-year yields are off the highs. We're up by just 2 basis points. The 10-year 470. With some stunning jobless claims data, let's get back over to Mike McKee. Hey, Mike.
Hey, John. Well, the numbers released a few seconds early show a big drop in jobless claims last week, 201,000, down from 211. The forecast, as you mentioned, was for 215. Now, this is the time of year when we do get a lot of weird readings in jobless claims because of the holidays, as the government tries to adjust for Christmas hiring and Hanukkah hiring and the whole holiday season. But this does suggest that at this point there is as good a chance of a strong report on Friday. This doesn't affect this is way after that, but the labor market's not in trouble.
Mike McKee, 201 is pretty stunning. Just give us sort of some historical perspective here. The low 200s on jobless claims is one thing, but 201, we're basically looking to break below 200K. Where's that come from?
Well, at this point, I'm guessing a lot of it has to do with the seasonal impact. The numbers were expected to be much higher. And if I take a look at the unadjusted number, the seasonal factors had expected an increase of about 35.6 thousand from the previous week. However, there were only 300. There were only an increase of 21,000. So the numbers were pushed down by the seasonal expectation for a much bigger number. And that's why you end up with this slow number. It is the lowest since February of last year when we hit 200,000.
Mike McKee, thank you, sir. Looking ahead to payrolls. Payrolls come on Friday, of course. The estimate in our survey, just a sneak peek for you, 163. The high is 234. The low is Andrew Honhorst of Citi, who was with us a little bit earlier. Andrew's looking for 120. That number, of course, coming on Friday morning.
So here's the difficulty with this data. We just got ADP employment change that underperformed, and that's sort of the slow hiring that we've heard about. And you're also seeing slow firing. This is sort of that stagnancy that people talk about. How do you interpret this? Is this a positive, really healthy market, or is this one that just is kind of treading water before there's a big change? This comes especially as continuing claims actually crept higher. So you look at all of these different aspects, and it's very hard to put them together with a cohesive narrative that can be consistent.
Let's get the view of Greg Deco of EY. Greg joins us now. Greg, you heard Lisa's question. How do you make sense of all this right now in the labor market?
Yeah, I think what we're seeing is a frozen labor market, one in which we're not seeing much hiring, we're not seeing much quitting. If you look at the JOLTS report yesterday, both the hiring rate and the quits rate were at a 10-year low. That tells me that a lot of business leaders are hesitant to move in any direction in terms of laying off individuals or in terms of hiring. And that means that a frozen labor market is unstable, because we could either see a further deterioration in labor market growth, which would directly affect income and consumer spending, or we could see a resumption of stronger confidence, which could lead to stronger hiring and stronger income growth. Policy direction over the course of the next few months is going to be key in determining which side of the ledger the employment market falls.
Can you elaborate on that? Yeah. Which policies have the greatest potential to move the needle when it comes to defreezing the labor market?
Well, I think we have a couple of policies that are likely to have an immediate effect on the labor market: regulation and immigration. Those are two key policies that will have a key effect on the labor market. Regulation, because it could lead to a pro-business sentiment environment where you see greater hiring and greater investment on the back of this deregulation tailwind. Immigration restrictions are likely to be hurtful in terms of the labor market, because they will restrain labor supply, which has been a key driver of employment growth over the course of the last 2 years.
You know, historically, people take a look at the labor market and they say that it's actually a lagging indicator, that actually it lags behind the business cycle by a good year, sometimes even 18 months. Are you saying this time is different, that it's actually more of a leading indicator because of the fact that it has been so dislocated post-pandemic?
No, I think what's different is the fact that conditions today are very different. Supply conditions are increasingly driving economic activity. Labor supply has been a key driver of employment growth, and that's very different than in the past. In the past, demand factors were the key drivers of economic activity. But since COVID, we've seen supply be much more important, and the value of talent is much greater than it was pre-pandemic. A lot of the different CEOs, CFOs that we talk to across multiple sectors highlight the value of that talent. They struggled so much to hire the right type of individuals, to train them, to increase productivity in terms of these higher costs and offsetting these higher costs, that they don't want to fire them. They're allowing attrition and performance-based judgment to guide their strategic decisions in terms of how to manage their workforce. And that's really key, and that's a key difference relative to prior business cycles, where the first resort for business leaders was to lay off massively at the first sign of a slowdown.
So what you're waiting for in terms of understanding the labor market is really political economy. What are going to be the policies that take place? And when you start thinking about fiscal sustainability, what do you make in what we're seeing, what we've been talking about for 3 hours, the move in bond yield? Is that because of this uncertainty about how Washington is going to enact Trump's agenda?
Yeah, I think there's a lot of uncertainty with regards to what's happening in terms of bond yields. You've had the Fed cut rates by 100 basis points, be extremely and too reactionary, in my opinion, but you've seen long-term bond yields actually rise, and that's likely a reflection of the expectation of higher inflation with deregulation, immigration restrictions, trade and tax cuts that are likely to be inflationary, but also the direction of travel of the budget deficit. We have a situation in which the budget deficit is currently around 6.5% of GDP in good times. That is not normal, and if you look out the next 10 years, we're going to be in an environment where budget deficits are going to average 6.5–7% of GDP. That is going to continue to pressure up long-term yields and could be a catalyst for a risk-off environment that could be negative for growth.
Can the U.S., though, act that way?
In terms of fiscal sustainability, that's a key question. I mean, one of the 3 arrows that Besant put in place is this notion of bringing back the budget deficit to 3% of GDP. What does that entail? That entails cutting the deficit by over $1 trillion per year over the next decade. That's a massive reduction in government spending. Now, this could be done if we think about entitlement programs, if we think about tax reform. I don't think that's necessarily where we're going. We're talking about potentially massive spending cuts, but let's not forget that if you cut spending, you also cut economic activity. So you have to be consistent in your messaging in terms of ensuring that reduction in the budget deficit while sustaining economic growth.
How concerned are you if there is a dojification of the government and you do get some massive job cuts or mandates that cause people to quit in a massive way? How much does that affect some of the labor pictures that people are looking at, especially considering how much government hiring accounted for some of the recent job gains?
Yeah, I think there are 2 points there. First, you're absolutely right. Government hiring has been a key element driving employment growth. Month after month after month, we've seen government sector hiring in terms of education at the state and local level being a key driver of employment growth. But the other big thing in terms of what could happen when you have massive spending cuts is, or at least proposals for massive spending cuts, is that they might not necessarily be implemented. We should not forget that about 15 years ago, the Simpson-Bowles Commission had this intent to reduce government spending, and the proposals were largely drawn down. Now, you did have the Budget Control Act in 2011 that led to a freeze in government spending with sequester threats over the course of a decade, but that was much less than what was initially proposed by the Simpson-Bowles Commission.
Just quickly, what's your reaction to Governor Waller this morning? Tariffs unlikely to impact his view on monetary policy, doesn't expect tariffs to have significant impact on inflation. Just a quick reaction to that to round things out.
Tells me there's a lot of uncertainty in the economic projections from the Fed. The Fed Chair Powell mentioned that some policymakers had included policy shifts in their projections, some hadn't, and some weren't sure. So there's a lot of uncertainty as to what is really contained in these economic projections. That's a big issue, in my opinion, in terms of Fed communication, because a Fed that is highly reactionary, but for which you don't know which policymakers is including what, is highly doubtful in terms of the trust that you can put in these projections.
Fed Minutes coming up a little bit later. Greg, it's good to see you. Great to have you there. EY. Thank you, sir. Mike McKee still with us, our economics and policy correspondent here at Bloomberg in the nation's capital. Mike, I want your thoughts on Governor Waller's headlines this morning from that speech and what you're expecting to see in the minutes later this afternoon.
Well, I think Greg kind of tied the two together when talking about what we might see in the minutes being some explanation for why some people were looking for an impact from Trump fiscal policies and some people were not. That's confused a lot of folks on Wall Street. What is it that you're actually predicting here in your summary of economic projections? I think Governor Waller's situation, you suggested it could be an audition, and maybe it is. But on the other hand, in the past, tariffs have not necessarily been inflationary, depending on how they're imposed. They are generally a one-time rise in the price level. We saw Donald Trump impose tariffs on China, on steel worldwide in 2018, and there was no appreciable effect on inflation. It depends on what's tariffed and the time frame of the tariffs, whether it keeps pushing prices up or not. So he might be right about that.
Mike McKee, appreciate your perspective as always. Mike McKee in Washington, D.C. I should also point out, of course, and Mike McKee knows this, that Governor Waller appointed to the board by President Trump in his first term. So perhaps a front runner of people on the board to think about who could be the next Fed chair.
There's a broader point here, and I think that we can all agree on this, which is that at this point, there is a question of how politically independent an organization can be looked at when there is a sort of speculation hovering over it, and you have the president talking, or president-elect talking at his press conference in Mar-a-Lago, not just about Denmark and Greenland, but also about how rates are too high and how the Fed should do something about that.
Let's have the market conversation now with Winnie Caesar of CreditSights. Winnie, welcome to the program. A lot of people came into this year thinking about credit, and they all said the same thing. I'm bullish. They didn't like where spreads were, but all-in yields were attractive. You weren't one of those people, Winnie. What did you see that makes you think things are different?
Yeah, good morning. We are definitely a little bit contrarian on the credit markets right now, and we went risk off in that rally following the outcome of the U.S. election in November. And it was based on a few key things. First, fundamentals are in an okay starting point, but we do see the potential for fundamental erosion to start to become more at the forefront of investor concern. Whereas really strong technicals were driving the ship last year and really drove spreads materially tighter to levels that we hadn't seen since before the great financial crisis. Now, that's helpful because you've seen a lot of inflows into credit ETFs and mutual funds, but that also leaves credit a little bit more susceptible to volatility, as some of those investors might get a bit skittish if they see total return losses because of rising yields or equity market volatility, or if any sort of recession or slowing economic narrative starts to come into the conversation.
Winnie, just to sort of underscore what you're saying that there's actually a fundamental deterioration that's been feeding into your bearishness, just even putting aside any kind of rate increase, and that really is the reason why maybe you're shifting away even from the more exposed, the more leveraged companies. Is that correct?
Yes. So it's a twofold thesis here. First, we've already started to see credit fundamentals shift a little bit to a weaker territory. They're still kind of at long-term average levels, especially for higher quality parts of the market. But we've seen interest coverage levels come down quite meaningfully as borrowing costs have ticked up. We've seen decent EBITDA growth across the credit market, but it definitely hasn't been ramping up or accelerating. And then even before the Trump election victory, we had expected that issuers were going to start to focus more on intentional releveraging through M&A, share buybacks, other sort of kind of equity juicing incentives, because they've been in balance sheet kind of defense or preservation mode for so long, and now it's the time to start to look to buy growth. And that generally comes with a little bit more execution risk. And it feels like we're kind of teeing up for this perfect storm of potential challenges within the credit market.
What does the maturity cycle look like, Winnie, given the fact that we're looking right now at all-in yields of almost 7.5% for high-yield companies? You're looking, if it really rises materially, it could be punitive for some of these companies. So how much are we seeing them actually have to incur the borrowing costs that we're seeing?
Yeah, this is a really interesting story. Within the investment grade market, there's always the kind of constant maturities. And in the next couple of years, you see very lumpy maturities, especially for financials issuers. Now, the good news is that spreads are still very tight, especially for financials, and they tend to be a little bit more focused on spreads than all-in yields. But from kind of an all-in borrowing cost perspective outside of financials, things have really been ramping up. And there are definitely a few key sectors that have pretty lumpy near-term maturities, be it autos or leisure. Within the leveraged finance market, it's a little bit of a different story because last year was so strong that we saw a lot of issuers very proactively push out maturities. This is especially true of the broadly syndicated loan market, where the amount of repricing and extension activity was really staggering. It almost kept pace with the U.S. investment grade market in terms of gross issuance overall, and it's a much, much smaller market. So we're not as concerned about kind of the near-term maturity side of things within leveraged finance, but we could see liquidity get a little bit more challenged if some of the growth expectations don't come in as strongly as people are currently forecasting.
Winnie Caesar of CreditSights. Winnie, appreciate your perspective. Less than bullish, that's for sure, on credits compared to a lot of bulls that came on this program at the end of last year into the new year. One debt market we're hyper-focused on right now. This move for the UK government bond market, yields higher by 11 basis points now. Let's call it 480, and the pound getting absolutely hammered. That's one to watch through the rest of today. Let's get you an update on stories elsewhere with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. Los Angeles is ramping up evacuation orders as the Palisades fire continues to rip through the area. Parts of northern Santa Monica now are under alert as widespread and damaging gusts worsen the situation. The Palisades fire was almost at 3,000 acres, while two other blazes flared up overnight, one near Altadena and the other near Salmar, southeast of Santa Clarita. President-elect Trump has asked the U.S. Supreme Court to step in and stop his hush money sentencing from going forward. The sentencing is due for this Friday, January 10th. The filing follows a verdict from a New York judge who rejected Trump's argument to vacate the 34 felonies in light of his presidential victory. Justice Juan Merchan, who oversaw the trial, has already said that he won't sentence Trump to any time behind bars. Former President Jimmy Carter is lying in state at the Capitol Rotunda. Lawmakers came together yesterday for a ceremony to honor Carter's life and legacy. The former president's state funeral will be held tomorrow, where President Biden will be among those delivering a eulogy. And that's your brief, John.
Danny, thank you. Shocking pictures coming out of Los Angeles. Appreciate the update there. Thanks, Danny. Up next on the program, we'll set you up for the day ahead. Plus, we'll catch up with David Rubenstein of the Carlyle Group in just a moment. From New York, this is Bloomberg.
Is the Vivian Tom clientele? Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world. Why do you position your products for this group of women? When I started, designing, I always want to do something that is empower women. When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example. My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They're like in the 20s, so it's a more affordable price for them. And then, my powerful woman's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
The opening about 40 minutes away. Equities recovering from losses earlier in the session. We were down by more than 1% at one point on a Russell. The Russell's down by just 0.6. The S&P unchanged. A dovish Governor Waller. Downside surprise on ADP, no doubt helping things out. Just a touch in the bond market as well, with yields off the highs of the session stateside. Can't say that for what's happening in the UK at all. With less than 1 hour to go until that opening bell, let's get you some morning movers with Manus Cranny. Hey, Manus.
Jonathan, big tech will welcome anything that's dovish, but Apple on the back foot as Indonesia banned the iPhone 16 sales. That's still in place. They want more investment from Apple in the country. $1 billion investment to make your AirTags is not enough. Let's roll it along. D-Wave, Jensen Huang lampoons the idea that you're going to have quantum computing that's useful to you very soon. 17 years, maybe 20 if you're lucky. Roll it down. Finish it off with Novo Nordisk. It's been through some very, very tortured moments over the past couple of months, Jonathan, on one of their new GLP-1s. Today, UBS come out with a buy rating on the stock. The sell-off is overdone. Positive inflection point for GLP-1s. Yes, they shaved back on the price tag, 750 from 1,100. Up 3.67%. Jonathan.
Yes, thank you, sir. Appreciate it. As we count you down to that opening bell, some data points to watch throughout this afternoon, including the number that we get from the Fed a little bit later. The number of people that maybe use the policy uncertainty to change their forecasts down in Washington, D.C. I think that's what I want to know. Isn't that what you want to know?
Well, basically, who among them is taking a look at the potential of tariffs and some of the other spending and saying, all right, just for that, we're not going to cut rates. Forget about it. Maybe we'll get names. We're not going to get names. You think we're going to get any color on that whatsoever?
I'd like a number at least.
Okay.
How many? Couple? Few? Several? Let's try and find out. 2 p.m. Eastern Time. Tune in. Thursday, of course, tomorrow, U.S. equity markets close for a national day of mourning for the former president, Jimmy Carter. On Friday, on the data side of things, it's a big one. We get payrolls, so look out for that on Friday morning. And coming up tonight on Bloomberg TV, just a programming note for you, peer-to-peer conversations with David Rubenstein. David's sitting down with Eli Lilly CEO, David Ricks. All caught up with Dave Ricks over the years. He's a fantastic leader. What did he have to say to you this time around?
Well, Dave Ricks is the CEO of Eli Lilly. Eli Lilly is a company that was started in 1876, a very respectable drug company, pharmaceutical company. But in the 5 years that he has been the CEO, the stock is up about 9 times. And that's in part because of the GLP-1 drug that they have, which is called Zepbound. They have also one, Mounjaro, which is for diabetes. But these are the weight loss drugs that we've all been talking about. And it's amazing what's happened in the pharmaceutical industry. The Eli Lilly was always a successful company, but nothing like we've now seen. In fact, it is now likely to be the first pharmaceutical company in the world to have a market capitalization of $1 trillion. It's now about 900 billion or so. And this is because people want to lose weight. Roughly 70% of the people in the United States are overweight, and amazingly, 40% are defined as obese. So this drug does tend to reduce your appetite, and it does have a beneficial impact. It now seems that it might also have a beneficial impact on other related problems that people have, addiction, smoking, and so forth. Those studies are underway. But right now, there's no doubt that people want to lose weight, and that people are using either the Novo Nordisk product, which is better known as Ozempic, or the product known as Zepbound by Eli Lilly.
How much is the optimism in the likes of Eli Lilly really dependent on the idea of the government actually covering the cost of some of these drugs at a time where that's been one of the hottest contested issues in that space?
Well, the government has gone back and forth on this from time to time, but private insurers are covering it to some extent. Not all of them are. But if you have insurance and it's covered, your costs are roughly $25 a month for each person who uses it. So that's affordable for most people. And many insurers are increasingly covering it because it does beneficial things for insurers. Think about this. If you have people that lose weight, they are going to be having less health problems. They have less health problems. The insurers will have to pay out less to their doctors and so forth. So there's a real benefit to insurers to getting people on this drug because in the end, it lowers the cost of insurance.
David, I'm going to be heading down to Washington, D.C. for President Carter's funeral tomorrow, and you actually were a domestic policy advisor under the Carter administration. And before we end, I'd just love to get your thoughts on what you want Carter's legacy to be, maybe what the public didn't see behind the scenes.
I did spend 4 years in the White House as a deputy domestic policy advisor. I worked for Stuart Eisenstadt, who was a domestic policy advisor. It is ironic. Jimmy Carter came to Washington in 1977, and a conquering hero. He'd beaten Nixon, Ford, the regime, and really beat Gerald Ford. He came in with high expectations. People thought this man is going to change Washington, D.C. He tried many things. He had a lot of political problems, and the hostages in Iran were another. And so he left Washington very defeated. He was humiliated in the loss he had to Ronald Reagan. It was a staggering loss. Carter really couldn't quite believe he could lose to Ronald Reagan. Now he comes back 44 years later as a man who is lauded by almost everybody for the things he's done in the 44 years since he left the White House. Among those, winning a Nobel Peace Prize, doing things like election monitoring around the world, helping to eliminate guinea worm and river blindness, doing Habitat for Humanity and so forth. So it's amazing how the turn of events has taken Carter from somebody who was very popular, not so popular, and now extremely popular back in Washington.
David, looking forward to honouring him tomorrow, that's for sure. Appreciate your time today, and of course, congratulations for being awarded with the Medal of Freedom, the highest civilian honour in this country. Thank you, sir. David Rubenstein there of the Carlyle Group and host of Peer-to-Peer Conversations. Coming up tomorrow, look out for this. We'll be catching up with George Goncalves of MUFG, Nina Richardson of ADP, Jim Zauter of Apollo, and the former Speaker of the House, Kevin McCarthy from New York. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
What would you say somebody young who's watching this should do if he or she aspires to be like you?
There's one component of our industry that people need to focus on, and it's not technical, and that's communication skills. Focus on being a phenomenal communicator, invest in that. Think about it, we have to convince a company to sell to us. You just don't walk in and buy the stock or tell them, yeah, you're for sale, I'll pay you this price. That takes years of relationship and effort. Why would somebody sell you that billion-dollar software company growing at 20%? Just because? No way. People hang on to these great assets. And then how do you get on the same page with the executive team of that company, even if they're existing or new? It requires just amazing communication.
If you go to a cocktail party and somebody comes up to you and says, I have $100,000 I'd like to invest, what do you would recommend that person do with $100,000? What do you think is a good idea to do with $100,000 today?
Sometimes they do, and I give them the most boring answer ever. S&P 500.
Just buy an index.
Buy the index. You don't have to worry about the quarterly earnings of a company. Did something change? Did somebody change management? You don't have to make this your full-time job. Just buy the index and you're going to be okay.
European countries need to think, do you want to compete as a small country or do you want to compete as Europe? I don't think they have a choice because the US and China have already started the race. And Europe needs to follow. There isn't a European company in the top 20 largest firms in the world. That is a problem.
But what does it mean for individual countries within Europe?
You can have more control and less growth, or you can have less control and more growth. If countries trust each other more and they build more European champions rather than each country having its own national champion, growth is going to be better, productivity growth is going to be better, the welfare is going to be better. But there is going to be less control at the national level. So right now, each European country wants to have its own telecom company, its own couple of large banks,
Its own bank.
its own large energy companies. And the question is, are you willing to surrender some of this control to European firms, which are going to be more productive, but you are going to have less control at the national level?
Seems like traders are just waiting to see whether we get a catalyst or tariffs. 30 minutes until the start of trading. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, it's anything but a quantum leap. Quantum computing stocks tumble after NVIDIA CEO predicts that useful machines are still decades away.
And Albertsons raises its earnings outlook for the year, a positive sign for the grocery chain after its proposed deal with Kroger fell apart.
And rising cases of bird flu giving wings to Moderna shares, at least for today. Moderna is one of only a few drug makers that's actually developing a vaccine for the disease. All of that and more coming up. Let's take a look at where these markets are trading after an absolute wipeout in yesterday's session. You can see a little bit of a bounce back. It's been a choppy trade so far this morning. We had ADP actually miss headline estimates, but then we had claims come in lower than expected as well. So a bit of a mixed bag as we head into Friday's jobs report. A little bit of green on the screen, though. You can see the 10-year Treasury yield right now unchanged, but we are very, very close to 470 right now. That would be the highest level since April, and a lot of strategists and bond investors taking a look at 5% as a buying opportunity.
Yeah, the longer end of the curve, I think, is shockingly high right now. I got this chart from Valerie Titel in London via Dan Curtis, our producer, and you can see that we're not quite up to the cycle highs. This is the 10-year and the 30-year yields. But when we get there, it's going to be the highest level we've seen since the Great Recession. So that puts into perspective really how high yields are, and the market has to deal with that.
Absolutely incredible. Jim Bianco says we might retest and beat that 2023 high. So something to watch for in the near term.
He's a Michigan fan, so...
Oh, okay. Rivalry. I don't even know what that means, but we will find out. Anyway, some stocks we are watching. Albertsons raises its profit guidance in the first earnings report since the judge blocked its $24 billion deal with Kroger, yet comparable sales growth slightly missed estimates. Market likes the projection, though. Albertsons up 1.5%. Rigetti Computing. This is one of those quantum computing stocks plunging after that comment from Jensen Huang, NVIDIA CEO, about a 20-year timeline for mainstream adoption of the nascent technology. We're going to talk more about that, but really taking a hit, down more than 26%. Moderna up 0.5% pre-market after a 12% gain on Tuesday. Scary stuff. There was a bird flu death reported in the United States. Moderna is one of a few drug makers developing a vaccine. We're going to discuss that later this hour as well.
Yeah, Katie's kind of obsessed with that story, so we're definitely going to talk about it. But first, economic data pointing in slightly different directions, right?
Yeah.
ADP was less than expected, and initial jobless claims also lower than expected. But that's so
signaling strength.
Bad news and good news.
Yes, very true. There's a saying out there: never trade on ADP. So, of course, the correlation between ADP and NFP is fuzzy at best. So we'll see, of course, if the action we're seeing this morning follows through on Friday. I thought it was interesting, though. There was a note out from Citi, friend of the show, Stuart Kaiser, saying that if you take a look at the options market right now, it's priced for a 1.2% move in either direction following Friday's report. So fireworks expected.
Yeah, what's interesting to me is we've talked about this, 1 basis point here, 1 basis point there, 6 basis points here. It brings us closer to 470 nearly once again. And the worry for Friday was that an overcorrection? Because once we hit 4.7, 4.75 is the one Julian Emanuel is watching for over at Evercore ISI. Also 5% as you've been talking about,
Well,
Katie.
if we get a miss, I mean, I would imagine we'll see yields drop like a stone, just given how far we've come.
More than 1 basis point.
More than 1 basis point.
Which is like?
Several 1 basis points moves.
But 1 basis point is like?
It's like a sneeze on the keyboard.
There you go.
Levered, though. It could be painful.
All right, I want to bring in our first guest. BMO Chief Investment Strategist Young Yu Ma joins us now out of Dallas. And I thought your note was fascinating because it kind of sets up in my mind a game of chicken. Do we get a positive catalyst for the market? Do we get earnings growth coming in or something from Jensen Huang that makes us bullish again before we get tariffs or mass deportations from Trump that freak us out and drive yields even higher? What do you think?
Well, thanks. It's great to be here. We do think that's kind of the push and pull right now that the market is going through. On the one hand, there's concern about tariffs. There's concern about rising treasury yields, sticky inflation, what happens in the labor market. And we're also looking at what are the catalysts? What is earnings season going to come in like? And what's going to provide the next leg up in the short term? We think the market probably has continued to be poised for a dose of caution because the risks just look like They're presenting more uncertainty for the market and tilted toward caution and profit taking at this point. But we do think catalysts will be coming. It's just going to take a little while here.
I want to talk about the relationship between the bond market and the stock market right now, because that's all anyone wants to talk about, it feels like. There was a really interesting note out from Goldman talking about, so far stocks have been resilient, but if you take a look at this current move in the 10-year Treasury yield, it's very reminiscent of what we saw in 2023, in 2022, periods that proved to be very painful for risk assets. How are you thinking about that relationship as we exceed, in some cases, 4.7%?
Well, those are good analogies and corollaries, because in October of 2023, we did see the 10-year Treasury yield rise just above 5%. It's probable that we think that level will be breached again. But if we look back to that time, it was actually a buying opportunity for both stocks and for bonds. And we think that probably a lot of the concern right now is a short-term concern. We don't think those 10-year Treasury yields are going to get to, say, the mid 5% range and stay there. We do think it would take a higher level than is currently anticipated to really cause lasting damage in the equity markets and the economy. So we think right now there's a lot of concern, but the underlying economics to us don't point to a sustained move and level above 5%. We think we could get to about 5%, stick around there for a while. But we think right now, this risk, which had been underappreciated by the market for quite some time, is now probably being actually a little bit overblown by the market here and could present a buying opportunity.
You know, one thing I'm interested about, too, is portfolio construction. Katie made this point a little earlier about potentially buying opportunities at 5%. You are definitely seemingly agreeing with that view. But how much fixed income? You have Vanguard coming out this morning saying that a 40-60 portfolio, not a 60-40 portfolio, but instead 40% in equities and 60% in fixed income could make sense at this juncture. Would you go that hard into a trade like that?
We're not recommending that to clients. We do believe that taking equity risk this year is still a favorable positioning. Certainly bonds have a place in portfolio, provide stability. We think we're on the verge of getting better yield pickup. We've actually been short duration for some time here now, and actually relatively light on our fixed income positioning, which we think could be more attractive in the coming months if we get higher yields here. So we wouldn't take that kind of tilt. We do think as the year plays out, there's going to be better opportunities to see gains from those riskier assets. But in the short term, there's no question there's a dose of caution. There's concern about these Treasury yields, how high they can go, and thinking about what happened when the markets saw 5% yields in 2023 is giving people quite a bit of jitters here.
But is it correct, Young, to say that you think the concern, the risk of higher yields is overblown? Because I can imagine it being a longer-term issue, right?
Yeah, we would say the risks are overblown. If we think about what the underlying economics are, we have inflation at maybe 2.5%, let's say even say 3%. If you tack on another 1% real yield on top of that, another 1% term premium, you're looking at something that's likely below 5% for an equilibrium level for the 10-year Treasury. So we think these levels are sustainable for the economy. If you look back to 1995, where were Treasury yields in 1995? We had short-term yields around 7%, the 10-year Treasury in the upper 7% range. This is a level that is digestible by the economy. It might take some adjustment, recalibration, but it's not going to derail economic growth. You're going to have strong productivity gains this year, and that's going to all start to kick in and be apparent in the second half of the year. But we could and are likely to have volatility before that.
Yeah, great context there, of course. Treasury yields in 1995. I know Matt was paying attention, but many people weren't. Let's talk a little bit more specifically about the tech sector, because you think about the stock market, so dependent on the tech sector. And you write in your notes that it remains a winner-take-most economy, so we believe mega-cap tech will hold up well. Talk me through that. Why does winner-take-most translate into big tech gains from here?
Well, these mega-cap tech companies have just built such strong moats around their business, and the ability to have deep pockets to fund the new technologies and really be on the forefront of technology and even buy up smaller companies that have other technologies that are useful is really a tremendous advantage at this point. And we think these companies are well positioned. There is some concern that perhaps some of the investments they're making, the CapEx, has a longer payoff timeline. And certainly there are some notes out about that where some investors, some strategists are concerned that the market might have a bit of a hiccup because of that extended time frame for the return on some of these investments. But we think these investments are so crucial to the economy, crucial to future tech spending and growth and productivity developments, that we think ultimately the markets will be comfortable with this level of spending, this level of investment, and these companies just have such a strong business that overall we think they'll continue to hold up and lead the market pretty well here.
BMO Chief Investment Strategist Young Yuma, good start to this year, of course, drumbeating to that jobs report, looking at where yields will impact the markets. But we're going to discuss more on the technology trade. We're going to talk about quantum computing, though. Stocks in the industry are having a moment. They were for a few months now, but one comment from NVIDIA CEO sending the shares of those companies off base and pushing those companies lower. We're going to talk about why next. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every trading day. Balance of Power, live around the world, only on Bloomberg.
Getting out of high interest, look at what's making headlines around the world. Wildfires tore through the Pacific Palisades area of Los Angeles. Homes were destroyed and about 30,000 people were ordered to evacuate after a brush fire erupted in the community, causing panic and traffic gridlock, with some people abandoning cars without leaving their keys in them on narrow hillside roads. The blaze has spread to almost 3,000 acres and remains uncontained. President-elect Trump is asking the U.S. Supreme Court to step in and stop his hush money sentencing from going forward. The sentencing is currently scheduled for Friday, like this coming Friday. The filing follows a verdict from a New York judge who rejected Trump's argument to vacate the 34 felonies in light of his presidential victory. The judge who oversaw the trial has said he won't sentence Trump to any time behind bars. And Bill Ackman's trade idea still has the market's attention a decade later, scooping up shares of Fannie and Freddie. the founder of Pershing Square, posted last month about a bet on the U.S. government unwinding its massive stakes in those companies acquired as part of a $190 billion bailout during the GFC. Ackman is eyeing a profit or forecasting a profit of 1,200% on the investment. Meanwhile, the shares have already soared by over 200% since the election of Donald Trump. The re-election analysts warn investors to approach the trade with caution.
We're now going to turn to a more nascent industry, of course, quantum computing. It has struck the fascination of investors, but shares of stocks linked to the next level computing technology are plunging today after months of bullishness. This comes after NVIDIA CEO Jensen Huang told analysts that quantum computing is likely 20 years from going mainstream. Bloomberg technology co-host Caroline Hyde is here to explain. One thing I did to really put some context around this is go back to Alphabet and what happened in early December here. The lead of our own story on this talks about, okay, fine, they have a quantum computer needing just 5 minutes to solve a problem that would take supercomputers around 10 septillion years. That was the exciting part.
Than the entire existence of our universe.
But the next sentence...
By a long shot, like exponentially long.
Right, so there's the promise. The next sentence was Google's next task was to find an actual use for that superpower.
Yeah.
So aren't they saying the same thing?
But it is interesting that Google quantum AI team have said we're going to find something relatively useful in 2025. Whereas here comes Jensen downplaying what stocks have actually risen about 1,000% in the last year, I might add. So coming off about 20% ain't much. But dousing a little bit of that euphoria, saying, look, it's going to take 15 years until we get something incredibly useful, 20 years until we get something significantly useful. And NVIDIA, in theory, should know, because NVIDIA has been working with Google Quantum AI to simulate the use of hardware, of chips that are going to be necessary in the use of these supercomputers. We haven't got the hardware yet to really overcome the significant limitations. The big breakthrough, the Willow chip, which is made by Google, is that it does help reduce errors, cancel out the noise. This was some of the significant issues that have been limiting quantum computers thus far. So maybe there's a little bit of, I don't know, bitterness or even a little bit of competitive streak feeling that Willow chips got there. But ultimately, Google's using NVIDIA to help simulate, to help identify the ways in which they have to build chips and hardware. So if anyone knows, Jensen should know as and when quantum computing really comes to bear.
Well, 2 points there. I mean, Jensen did say that 15 years for very useful quantum computers. So who knows what very useful means to him, but that's what I was going to ask. I mean, is this Jensen talking his own position because NVIDIA isn't ready for prime time and sort of talking back the market, or is this really, do you think, an honest assessment of where this industry actually is?
Are you asking me to say whether a CEO is honest or not, Kate?
That's
I mean,
exactly.
I have to just say that thus far, the guy's been honest. He's taken big bets very early. He saw generative AI and the need for GPUs and AI applications of his own technology far before anyone else did. If he's going to see round corners, I would bet on him to be able to do so. And I haven't really seen something authoritative. When we had Google Quantum AI chief on, he didn't say, yes, we're going to have a breakthrough in necessary quantum computing that's going to be super useful in the next year. They're just going to start to find the application. So perhaps they're actually singing from the same hymn book here. It's just the market got ahead of itself. We, the retail investor and the institutional investor, powered up these particular companies, these smaller quantum-related stocks, to the tune of thousands of % on the hope that maybe we're going to have a breakthrough in the next year and then the year after that. Funnily enough, maybe the market's just getting ahead of itself.
You point out that some of these stocks have already risen rapidly. Qubit, QUBT is the ticker, is up, what, 1,900%? Rigetti is up 1,500%. But these are still just only 2 or 3 or 4 billion-dollar companies, right?
And their revenue, I think Rigetti, they have a 3 million per quarter revenue.
Yeah.
These companies are so early doors in what they're going to be able to provide in terms of useful application of what they're building, that many are just pumping them up on the hopes that they'll have a key breakthrough in the next 10 years.
NVIDIA.
But these are kind of like biotech stocks. You either win or you lose.
Yeah.
Well, yeah, let's even take an even bigger step back. If we're talking about Rigetti, $300 million, what is useful? You know, going back to Katie's earlier question, useful today, what would show progress over the next year, even if you believe that the biggest of gains are going to come in 10, 20 years?
Yeah, and Bank of America did a good job at trying to point out where would quantum be useful. Drug discovery, most prevalently. Actually, generative AI is where it's going to be deeply useful because we're going to be able to be speeding up the way in which we train data and inference. But that is unlikely to be coming. And I think Bank of America are like, yeah, and that's going to be occurring in the next couple of years. But in the longer term, what is going to be useful in the here and now is continued breakthroughs when it comes to these chips, when it comes to actual canceling out of the noise. Basically, the fact that it's incredibly difficult to basically use the hardware as it currently stands. It can only run a certain number of, I don't know what they're called, quantum operations, so to speak, in a certain amount of time before the noise just gets too much and you start to not get accurate results. So how can we understand that? How can we ensure that ultimately when you're holding these things at freezing temperatures to be able to allow some of this quantum physics to even allow to be working, how do we overcome that? How do we store it, make it also scalable? Because this is expensive to hold temperatures at such a level.
Well, I want to get the investor perspective here. There's at least one ETF that tracks this industry.
Yes.
The ticker is QTUM. It's an ETF from Defiance. It launched in 2018, so it really was ahead of this wave. Obviously, it had a fantastic year last year. It took in $500 million, almost a $1 billion ETF. Even with Jensen Huang coming out and pouring some cold water on this craze, I mean, how excited and interested are the investors that you talk to on BTech about this industry?
Well, we had Sylvia Jablonski, who's behind Defiance, the ETF for quantum, on. And look, she's actually saying it. If you look at the performance of the ETF, it underperformed the likes of Rigetti because they have to iron it out by ensuring they've got diversification, by putting the likes of IBM, Google in, people who are actually at the forefront of building some of the supercomputers, not just the penny stocks or now the dollar stocks that you see. and she really is saying that this is going to be the trend of 2025. We had a lot of people coming on saying, now we've got to these stages within generative AI.
She would say that, wouldn't she?
She would. Well, I mean, but I think she's also betting on all other areas of innovation. So maybe she wants to continue to see the inbound into her ETF, but I think she was realistic that you've got to bet on some of the bigger players, not just some of these smaller stocks.
Yeah,
she's a great guest.
She's great.
I've seen her on, what's that show called?
ETFIQ.
ETFIQ.
You remember that? Yeah.
Mondays at noon.
Absolutely. Yeah, they're a thematic issuer, so they are exposed to a lot of the shiny objects, as Eric Balchunas would call them.
You can catch Sylvia on Bloomberg Tech.
You can.
Weekdays
she also
at
has
11.
a leveraged MicroStrategy one as well. I mean, she's in on all the hot properties.
Yeah, it's going gangbusters.
Great having you on, Caroline. Thanks so much for joining us. Caroline Hyde there from Bloomberg Tech. Tune into that program. As I said, at 11 a.m. Eastern, Caroline and Ed Ludlow interview CEOs from Panasonic and Mobileye, as well as others from CES in Las Vegas going on now. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
All right, welcome back to Open Interest. You can see that little bit of a rally I was talking about half an hour ago, totally dissipated right now. We're still about unchanged, but the color is red, and that's significant because we saw a lot of red yesterday when it comes to both of these big benchmarks right here, the S&P 500, the NASDAQ 100. Not even NVIDIA could save us yesterday. The worst day of the year for both of these, which isn't saying too much given that it's January 8th. You also see some weakness in the small caps right now. The Russell 2000 currently down about 0.9% pre-market. This was your slight outperformer yesterday, but still a big down day for the small caps today. And at least right now, we're set up for another down day across the board, across all the size tiers. We'll see how that develops as we get a little bit deeper into the trading action. And with less than 4 minutes to go, coming up as we welcome the market to this Wednesday day of trading, we'll discuss the market moves with JP Morgan's Abby Yoder. That conversation coming up next. This is Bloomberg.
How do we reach down to the 18 to 35-year-old market? How do we bring these kids, these influencers, this new generation of people interested in the game of golf? There's 738 million people in the world who are interested in the game of golf. Don't play the game of golf, but interested. There's about 60 million golfers. So we have another 670-odd million people we can go figure out how to get them interested, not just in live, but in the game of golf. And so we sit down and you talk about this internally with your production team, you talk about with your marketing people. When you look at our audience base today, that we have like about just around 50% of our ticket sales are 45 years and old and younger. Following the PGA Tour, it's the oldest aging demographic in sport. It's 67 and a half. So in a matter of a year and a half, basically, we've pulled that 67 and a half down to 45 because of our product, because of the entertainment side. There are places around the world where 32% of our ticket sales are women. So they're coming to an event that they feel inclusive with, right? So all of a sudden, we're seeing these data points coming out going, my gosh, why haven't, we're owning this space.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Just moments away from the starting bell. Not a lot of action in futures. We're pretty much unchanged here as we wait to see Whether we get some catalyst to drive the market higher or something terrible to bring it down again. S&P futures up 1 or 2/100%, totally unchanged on the NASDAQ. Russell futures are climbing, Katie. We'll talk about that.
They're falling.
Or sorry, falling significantly, though. I meant real movement there. Red, green. Take a look at the NASDAQ market site. You've got Principal Financial Group, a fintech ringing the bell there. Over at the New York Stock Exchange, there's some kids. Exodus Movement. It's a software services company, small, but it's up in the last 12 months, 700%, 28% so far this year to date, and we just started, so pretty good for them. Katie, what do you see in terms of other indexes? Or
Well, it's exactly what you said, Matt. Not too much to report right now. We do have the colors are red, and we are moving a little bit lower in the first seconds of trading right now, from the S&P 500 to the NASDAQ 100 to your small caps. Of course, all of the action is on Friday. U.S. markets are closed tomorrow, of course, for President Carter's funeral. At least the stock market is. So a lot of attention paid to 8:30 a.m. on Friday. We had a mixed bag of economic data this morning. Not really a clear picture. Maybe that explains these small moves. At least if you take a look at the large stocks. The small caps, your little guys, the Russell 2000 down about 0.9%. We'll keep an eye on these ones as well. But let's look under the hood here, because we've been talking about those quantum computing stocks really taking a big leg lower after comments from NVIDIA's Jensen Huang. He said that very useful quantum computers are likely 15 to 20 years away from reality. Again, what very useful means to Jensen Huang could mean something to all of us. But in any case, you take a look at Rigetti right now, down about 34%, Shanali.
Yeah, speaking of NVIDIA, let's take a look at the chip stocks at the open, because of course you saw a brutal set of selling yesterday when it came to NVIDIA. You're seeing it relieve itself right now, up about 1.5% this morning. There were concerns about tariffs and inflation. They're all on top of Wall Street's mind as Trump prepares to enter office. But it's interesting, Matt, you still see a pretty mixed trade. AMD still down more than 3% at the market open, but Micron extending its gains another 1%.
All right, I'm looking at Albertsons. After spending a significant amount of time in England, I really care about grocery store stocks. Albertsons raised its profit guidance in its first earnings report since a judge blocked the $24 billion deal with Kroger. The company's comp sales growth missed expectations slightly, and you can see the shares down a little bit, but I don't really care about grocery store stocks. I'm just saying that.
I wasn't sure. You know, I would believe almost anything you said, which is pretty dangerous. But in any case, Albertsons down about 12% over the past year. Definitely needs some good news after that merger fell apart. But in any case, let's broaden out this conversation with JP Morgan Private Bank U.S. equity strategist Abby Yoder joining us on set. Great to see you in person.
Great to see you.
So let's talk about drivers of this market right now. One of the narratives, of course, towards the end of 2024 was that this was going to shift away from a macro-driven market into more of a fiscal-driven market. It feels like in the early days of 2025, though, you're seeing every economic data print move this market. A lot of attention paid to Friday's jobs report. If you take a look at the options market, how are you thinking about the potential catalysts going forward?
Well, I think to your point, yes, Friday is very important from a labor market perspective. I would say our view on the labor market at the moment is that it's loosening at the margin. It's nothing to be very concerned about, and it's loosening to an extent that allows the Fed to continue to cut. In terms of catalysts in the near term, I think the most important thing really is going to be earnings, which is coming up starting next week. So I think that's something that we're very focused on. I think the consensus estimates are around 12% growth for the quarter. We're slightly above that in terms of our outlook, and a lot of that is being driven by tech and our optimism for tech going into next year.
I'm glad you specified, because when we look at those estimates, one big question I have is you have a stock pickers market once again, and more investors saying to us that you can't even pick sectors anymore. You have to pick stocks within the sectors. So what are the ingredients that you're looking at for companies to outperform here, that growth story?
Yeah, well, so I think to the point on looking within sectors, right, so we're still positive tech, but the way we're thinking about it is yes, we still like these mega cap names, but we're in this we're entering the third year of this AI phase, right? And so we're thinking about different parts of the tech supply chain that are going to benefit in that type of time period, right? So when you're thinking about a data center, for example, thinking about companies that are supplying the components that go into those data centers and that allow data transmission, which is obviously very important and is going to increase as these data centers process more information. And so that's something that we're thinking about. So not just necessarily the mega cap names, but the other names that are going into that build out as well.
If I think about a rally, I have to worry about yields. And I mean, I showed a chart at the top. We're perilously close to 2008 highs. In the UK, I think they're there, right? Isn't that a concern? Or I've heard some people paint it in a bullish light. Is it a good thing for stocks?
I mean, it's not necessarily a bad thing, right? I think the way that the market's moving right now, and the way that let's think about it. Let's compare it to the move in yields in the fall, right? And what you saw was stocks actually held in quite well when rates moved that much because economic data was hanging in. That's what we're getting right now, right? And I would say there is definitely a concern around what's going on with the fiscal picture, right? That's what's really weighing, I think, on the term premium as it relates to rates. But the difference between, to your point, Matt, on the U.S. versus the UK is it's not necessarily like a deficit concern in our mind because you're not seeing the dollar sell off, right? You're seeing the pound sell off in conjunction with rates, and that to us is like a fiscal concern in terms of their outlook. Whereas in the U.S., you're having that decoupling of rates versus the dollar, which is to us signals that the market isn't quite concerned right now. There's like some tidbits of that, but not overly concerned.
So if you dissect the drivers, maybe it's not as scary as maybe the 4.7 on the 10-year Treasury yield would be at first blush. But is there any level that would concern you when it comes to the long end, drivers aside? You had a note from Goldman out this morning saying that basically equities have been really resilient during this bond sell-off so far, but that leaves a lot of scope for downside if we get much higher.
Yeah, well, so I think, and this isn't precise, but I think there's like probably a psychological level around 5 to 5.5 that would cause some pain in equity markets. But I think what's important, and we incorporate this in our outlook, is right when you're thinking about what is the drive, like why do rates matter to equities, it's really around mostly valuation, right? And so in our outlook, we have a year-end target of 6,400. A component of that is valuation compression, right, down to 21 times. And I would say that's probably below the majority of the street in terms of their outlook. And so we're taking into account like those higher for longer rates in that outlook, in that view.
It's interesting. We talk so much about rates, but one thing that's harder to digest, I think, is the impact of the dollar on equities as well, because that's what's been moving very drastically in light of any conversation about trade. Data Track this week said that the nominal dollars index, the gain, is worth 36% of the S&P's relative outperformance since the election. That's incredible. I mean, if that's the case, then what would it mean if the dollar were to reverse?
Well, I mean, I think there are two components of the dollar move. I mean, a stronger dollar is not necessarily good for international profits as it relates to these large cap companies. So I would also
domestic investors. Who cares?
Yeah, right? I mean, I would argue that like the stronger dollar has been a negative impulse on the equity market. Like I think that's been more of the headwind, and I think it's one of those things that's under the radar because we're pointing to rates. But I do think the stronger dollar, from that perspective, will be not obviously a fundamental headwind, but a headwind in terms of earnings for international companies.
Abby, we have to leave it there. We thank you so much for joining us here on set. Happy New Year to you. Can you still say that? Is it too
Larry
late?
David says that you can. January 7th was
Is
the
the
last
cutoff?
day.
Damn, we're a
According
day
to Larry
late.
David, if you put stock into that.
I don't.
I do. What he says makes sense.
Boy, is this another debate we're going to put our guests up to? That's what I want to know, Abby. Again, thank you so much again. I want to quickly check on some stocks here because you have eBay just moving higher. It's your biggest gainer in the S&P 500. Meta said it will allow eBay ads on Facebook Marketplace in Germany and France and the United States to comply with an EU antitrust order. The EU ordered Meta to stop trying its classified ad service to Facebook's social media platform, and eBay shares now highest since 2021. We're going to keep you in the loop on all things moving under the hood. Interesting single stock stories here. Now coming up, another one, Moderna stock on the rise as it looks to help another public health crisis. We're going to bring you the details of that next. This is Bloomberg.
Waitlist it on Bloomberg Technology.
We're excited to really change the expectations for space companies where you have this always-on, reliable, and frankly dynamic satellite connectivity that you would expect of your power grid or of your cell phones. And so we think that this is a huge opportunity space, and our first contribution to it is through shared infrastructure.
You can see this whole ecosystem developing, and you have an exponential growth right now because easier access to space means more demand for space, and that's the definition of an exponential growth function. So if you think about someone like Varda, who is only possible now because access to space is cheaper and easier, we're demanding more access to space.
I think that's what's so exciting from a business perspective, the fact that if you can do it, you're one of a few numbers of organizations in the history who've actually pulled it off. And so it creates a very defensible position, because again, space is very, very hard.
Don't miss Bloomberg Technology live every weekday.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
All right, welcome back to Open Interest. Quick check on these stocks. About 12 minutes into the session, you can see red on the screen across the board, across the size caps too, because the small caps right now really in the hurt locker. The Russell 2000 down about 1.2%. This fall is about an 0.8% fall yesterday. A lot of concerns. Higher for longer. Will they, won't they, when it comes to the Fed's rate cutting trajectory? All of that is being expressed in this index right now. We'll continue to keep an eye on that. But it's time now for our top calls. Some of the analyst action in focus this morning. And first up, Palo Alto Networks getting a pair of analyst downgrades today. Both Deutsche Bank and BTIG said that the stock no longer a buy. The DB analyst expects that cybersecurity companies will underperform this year, while BTIG cites limited upside catalysts for the stock, which is currently down about 3%. Next up, you have Kellogg getting downgraded to a sell at TD Cowen. The firm cites a tough year for consumer staples and says that the company's market share losses and its uninspiring product pipeline suggest that the spinoff has not improved the company's competitiveness in the challenging breakfast cereal category. A very competitive landscape there. Shares down on WK Kellogg about 7%. And finally, with Barclays upgrading Tapestry to a buy. The analyst says that the parent company of Coach and Kate Spade is well positioned to gain market share. Those are some of your top calls. And one stock that we're keeping a close eye on today is Moderna. It's up this week as the drug maker is working on a vaccine for the bird flu. And of course, one person in the U.S. has died from that flu, while there have been over 75 confirmed cases. Here with more is Sam Fazeli of Bloomberg Intelligence. And clearly, shareholders of Moderna and some of these other names are optimistic here, Sam. But what is the actual revenue potential when you think about the avian flu?
Yeah, hi. I'm sorry about my voice. I'm the victim of one of these.
Oh, no.
Sorry.
You're doing great.
A brilliant laryngitis case hit me, so there we go. It's the first time in my life. Nothing to do with COVID, nothing to do with bird flu, just a common garden virus. So the thing for Moderna is that they have been working on an H5N1 vaccine, so has, I'm pretty sure, Pfizer-BioNTech, and there are already 3 approved. The first one that got approved was Sanofi's back in 2007. right? So let's put that into context. Moderna doesn't have any vaccine approved in this case. Of course, they have a good technology for putting these vaccines out. We do have a case of an unfortunate death in the Louisiana patient. That's the first death ever in the United States from H5N1. But there have been 900 deaths over the past 10, 15 years of circulation of this virus, mostly in developing countries. So there haven't been any in the United Kingdom, etc. So what value this has for Moderna or BioNTech or Novavax, as in my view, is questionable until we see proof, and I hope we never see that there is transmission of these viruses from human to human, which we haven't seen.
All right, Sam, we're going to let you go. Go get better. That sounds painful. That is Sam Ciselli.
Have a hot toddy.
Exactly. Go enjoy that. It's late in London, so that would be acceptable. Sam, really appreciate your insight. That is Sam Ciselli of Bloomberg Intelligence. And speaking of healthcare, next week, I'm excited. I head to San Francisco for the 43rd Annual JP Morgan Healthcare Conference. On Monday, I'll speak to a number of CEOs, including Christopher Weber of Takeda Pharmaceutical, also Emma Walmsley of GSK. I'm also excited to speak, of course, to Dave Ricks of Eli Lilly as well. A lot of territory to cover there. But before we leave on this block and go to commercial, let's check in on shares of Boston Scientific. The medical device company said it has agreed to acquire Bolt Medical and pay about $443 million upfront for the 74% stake. You can see shares currently higher almost by 5% or so. Also, coming up, Tiger Cubs delivered in 2024 thanks to tech stock picks such as Meta. We'll explore the results next in our Wall Street Beat. This is Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to Bloomberg Open Interest. We're taking a look at stocks right now. A little bit of the deepening of those losses in the S&P 500, currently down about 0.2%. The NASDAQ 100 down about 0.1%. The Russell 2000, the small caps, really falling out of bed this morning, down about 1.4% on the Russell 2000. And I think so much of this is tied to what's going on in the Treasury market, particularly when you talk about those small companies. Where you need lower rates is in those broadening out trades, totally predicated on the rate cutting outlook, which of course has been slashed in half.
Absolutely fascinating. Most sectors in the S&P 500 in the red today on the heels of that rate movement. Even the financials, which were largely beloved, but of course higher for longer, means a lot of things, doesn't it, Matt?
Yeah. I mean, look, the Russell 2000 we show often the chart of how many companies are losing money in that index.
We certainly do.
Right? And so interest rates really matter to at least 40% of the index. And right now, the 20-year yield is over 5%.
God, you love that yield. That's going to be
focused in on the 20s.
That will be the benchmark. You're going to will this into existence.
You know, we're going to need to start citing the S&P mid-cap 400 at this point, too, to start to get a gauge on how these mid-cap stocks and small caps are doing. All right, we're going to switch gears. We're going to talk about the big guys. It's time now for the Wall Street Beat. More hedge fund returns are rolling in, notably Tiger Management. Gained 24% last year, with Meta as biggest position for tech-focused stock pickers. Meta shares climbed 65% in 2024. We're going to discuss this with Bloomberg's Hema Parmar. Interesting. Tiger Cubs coming back again. Have they kind of gotten over the high water mark here? Because they had a lot of pain when we saw the drawdown in valuations. But big tech, really, really interesting. We know they've all been taking different strategies into how they approach the Mag 7 even.
Yeah, so it was a really tough 2022. We saw numbers we really haven't seen before. Some have gotten out of their high water mark, some haven't. So if we look at Viking, for example, they're a fund that didn't lose nearly as much as their peers. They bounced back off their high water mark pretty much the year after. But this is the first year for Co2, where they bounced back from their high water mark. If we look at Lone Pine, they're close. They only have to make about 4 or 5% more to get over that. But Tiger, they had the worst performance, and a lot of these guys had 2 bad years back-to-back, 21 and 22. So they still have to make about 50% more than they have. That said, they have bounced back a decent amount and posted double digits for 2 years, so investors are probably happy with that, but still a long way to go.
Is the common denominator for all of these names that did well big tech? Is there anyone who wasn't overweight some of these big tech companies that we talk about all the time that also performed?
Yeah, so all the Tiger Cubs, they made most of the money. I mean, they focused on tech, so their gains really came from tech, and Meta was their biggest position pretty much across the board. But there are some other equity stock picker funds that did make money without necessarily being an NVIDIA or Apple or Meta. So let's take a look at Contour. They're a $3 billion hedge fund. They're up about 47% so far this year, mostly because of their short book. They were not in NVIDIA or Apple. Then if we look at Rubrik, they were up 81%. That's because of an energy bet that worked out really well for them. They were in Taylor Energy, and that stock more than tripled during their investment period.
What does investor appetite look like for the Tiger Cubs? I mean, I'm old enough to remember Julian and how important these investors were on the hedge fund scene, but that's because I'm old, right?
He quotes the Dow, that old.
Exactly. So do the kids still invest with these guys? Are stock picking funds all the rage right now?
Yeah, so stock picking funds are the most sought after strategy, according to a Bank of America report. They are the hottest one right now of the space. But I do think when you look at Tiger Cubs, you want to look at them a little bit differently because they are so tech focused, because so many of them have really gone through a trying period, and because they do a lot of private venture as well too. So whether investor demand has come back for those funds, we didn't really see a lot of appetite for Tiger's latest venture fund, for example. I think they're still trying to ramp up across the board, all these funds, and I think investors are watching very closely. I wouldn't call them all like the hottest funds just yet, but equities as a broader strategy is in hot demand.
Has there been no reputational damage over the past years from the various scandals and, massive jail time that some of them have gotten?
Hedge funds broadly?
No, Tiger Cubs.
Tiger Cubs. He's referring to Archegos.
Archegos. Oh, yes. Well, that's a family office. So,
right, no, but Bo Wang was a Tiger Cub, right?
Yes, yes. Yeah, I mean, I think...
And he got in trouble before Archegos. That wasn't his first brush with the law.
I think a lot of the reputational damage has come from just pushing so fervently into private equity and tech at a time when it was just not opportune, and kind of getting over your skis on some of these venture bets, having it blow up in a big way, having that pain across the board. And I think that has really soured people to having too much exposure and concentration into some of that exposure.
But it's a crossover model, and that's what really was pioneered by these Tiger Cubs in the recent years. It looks so rosy. Tiger Global, Co2, is that crossover model where venture is being sought after, is it dead yet? Because we're on on the precipice, in theory at least, of an IPO rebound.
Right.
This would be the time to cash out of some of those trades.
So that's the thing. Yeah, you know what? This could be the time to be really investing in the space. The problem is a lot of allocators already invested very heavily in the years before, so they got burned. And they have less capital to put to work, and they have less redistributions from PE. So when they're looking at where to put their next dollar, they're really thinking, okay, do I put it in a hedge fund? Do I put it in more private equity or more venture where I'm already overexposed? Yes, you know, for managers that have not had that exposure in the past, this is a great time, and we've been seeing that push in, but so many have their hands tied.
Emma, great having you on.
Thank you.
Love talking about this. Old school is new school kind of stuff. They're back. Emma Parmar there covers hedge funds for us, and Shanali obviously does that as well. We're looking at some, I guess, a tech stock right now that's moving a lot this morning, eBay.
This is fascinating. This is the biggest move since 2021 for eBay.
And so do you ever use eBay?
You know, I don't. My husband does a lot because he likes to search for old cameras that you can't find that easily.
Well, I can tell you that because I've sold a lot of stuff on eBay lately.
You seem like the type.
They have this new promoted ads thing where they take like another 10, 12, 15% from the seller. And so if they get their ads in more places like Facebook, they can raise fees drastically.
And you can thank the EU for that. Anyway, coming up in the next hour, Sarah Wolf from Morgan Stanley Wealth joins us to talk ahead of Friday's jobs report. This is Bloomberg.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 120 countries across the globe. Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Multiple wildfires are tearing across the Los Angeles area, chewing up thousands of acres. L.A. County Fire Captain Sheila Kelleher tells CBS Morning her crews are having a difficult time wresting control.
It is hurricane force winds, and you can imagine trying to fight fire in those winds.
The Los Angeles Times reports firefighters are running out of water. CBS News LA's Rick Montanez is in Pacific Palisades.
These flames are burning so close to these homes. And I've got to tell you, even if these buildings do not catch fire, all of these units are going to have smoke damage inside because this smoke is just so thick and the winds are so strong and there are so many embers.
Thousands of people have been evacuated. Zion Brown works at an assisted living facility in Pasadena.
I was running up to the third story, second story, carrying people down, just picking them up because we do have a lot of wheelchair people in here. So we did eventually, we were able to get everybody out of here at a timely manner before the building actually went into flames.
President-elect Trump making people nervous overseas with a threat to use military force if needed to take over Greenland. This man in Copenhagen doesn't doubt it.
He did say something of the same extent 8 years ago, and we all thought it was ridiculous, but I think he's more serious about it now.
Mr. Trump says the U.S. needs Greenland for economic security. President Biden has some closing thoughts, and he laid them out to USA Today. Here's CBS's Linda Kenyon.
In a sit-down with the newspaper, the president said he believes he could have won the election, but he also said he is unsure if he would have had the stamina to serve another 4 years. He said he told President-elect Donald Trump during their face-to-face post-election meeting in the Oval Office that Trump should not settle scores when he takes over. He also described Trump as very complimentary of Biden's record.
In Gaza City overnight, the health ministry says Israeli strikes killed at least 5 people, including a woman and 2 babies, one of them born 3 weeks ago. The Israeli military says it only targets militants. The IDF accuses them of hiding among civilians. You haven't heard the last of a man found guilty of killing his wife and son. CBS's Jim Krasula has the update. A federal judge has ruled convicted killer, disgraced South Carolina lawyer Alec Murdaugh, owes an insurance company nearly $15 million as punishment for a fraud scheme. Murdaugh stole the money from a multi-million-dollar wrongful death settlement intended for his former housekeeper's children. They believe he killed their mother and tried to make it look like an accident. The Dow is down 148 points. This is CBS News.
Food.com.
Happy birthday to the king.
Happy birthday. Elvis Presley died in August 1977. Had he lived, he would have been 90 years old today. A big celebration is scheduled at Graceland, including movie screenings.
Excuse me, Mr. Garvey. Why can't we settle this?
Did I say move? There will also be a special concert and conversations on Elvis with his friends. Also taking place at Graceland, the annual Elvis Presley Birthday Proclamation Ceremony.
Thank you, Elvis. And happy birthday, Elvis. Thank you, everybody, for being here. Thank you very much.
Jennifer Kuiper, CBS News.
Mexican President Claudia Sheinbaum is poo-pooing President-elect Trump's threat to change the name of the Gulf of Mexico to the Gulf of America. Sheinbaum points out the current name is recognized by the United Nations. And in a jab, she talked about Mexican America and said that sounds nice. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming live on YouTube as well, so head over to youtube.com, search Bloomberg Podcast. That's where you'll find us. Alex Steele, Paul Sweeney, we're live here at Bloomberg Intelligence radio program. Coming up, we're going to check in with Rob Carolyn, Bloomberg meteorologist, get the latest on the L.A. wildfires. The video is just extraordinary. Will Hoffman, Bloomberg Intelligence senior rate strategist, is going to join us here. We've got, seems like rates higher for longer. What does that mean for markets? Michael McKee is going to join us, Bloomberg's international economics and policy correspondent, on all the labor data we saw today and what we're going to see on Friday with the jobless claims. Jonathan Palmer, senior healthcare analyst at Bloomberg Intelligence, is going to give us a 2025 preview of what to see in some of those healthcare device stocks as well. So a lot coming up
you didn't
in
tease
this hour.
my energy guest.
Tease your energy guest, please.
We had the CEO.
Who's your energy guest?
Well, it was CRC, which is California Resources.
Oh, they're the ones who take carbon and shove it into the ground.
Yeah, he knows that because I told him this already. Anyway, it's going to be very cool. They received a lot of permits. They're one of the only companies in the country that can actually do this. And they're going to store the carbon, then they take it out, and then they send it to customers so the customers can use it again. So it's a weird kind of storage solution. Very cool. We're going to talk to the CEO.
That's energy. Guess where that came from, folks. So, all right, let's kick it all off with John Tucker again. Hey, Bloomberg Business Flash, John.
All right, higher Treasury yields led to yesterday's sell-off in stocks. This morning, that's still a risk. The long bond, 30-year 493, I'm going to call it. Markets also digesting some Fed speak. Federal Reserve Governor Christopher Waller says he believes inflation is going to continue to cool toward the bank's 2% target, prompting his support for additional interest rate cuts this year.
As always, the extent of further easing will depend on what the data tell us about progress towards 2% inflation. But my bottom line message is that I believe more cuts will be appropriate.
And right now, the S&P 500 is 3 points lower off the worst level of the session, 5904. The Dow down 100 points, and the NASDAQ 100 right now is up 6 points. That is up just about, well, under 0.1%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
All right, thanks so much, John Tucker. Alex Steele here, alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the news you need to know: business, economics, finance, politics, as well as climate. We want to get the latest with these unbelievable LA wildfires. The pictures, the videos are staggering. Rob Carolyn joins us now, Bloomberg meteorologist. Rob, what's the prognosis here for the wildfires?
Well, Alex, it's going to be bad for the next 8 to 12 hours because we're still dealing with the winds peaking across the LA basin right now. Storm systems departing the region. There's a cold front dropping in behind it. We've been seeing winds in the lower elevations gusting all morning long in the LA area between 45 and 65 miles an hour. You get up into the higher elevations, there's been gusts to 75 and 80 miles an hour, and that's going to persist for another 6 to 10 hours or so, and then we'll start to see the winds diminishing through the afternoon and the evening. By midnight tonight, high pressure builds in. They should see the winds drop dramatically. Hopefully that's going to allow them to play catch-up with the fires, but boy, the next 6 to 10 hours is going to be rough there in Southern California.
Rob, what's the any precipitation in the forecast at all?
No, Paul, the storm that's pulling out is producing some precipitation right along the California, Arizona, and the border area. We're seeing some showers out that way, but most of them are moving away from Southern California and not towards Southern California. The storm is actually going to be ejected across the southern plains and cause all types of travel problems from Denver to Dallas to Nashville and then eventually to Atlanta as a snow and rainstorm. But nothing in regards to precipitation headed towards Southern California anytime soon. And there could be another wind event later in the week, more towards the San Diego area around Thursday and Friday.
I know that you're a meteorologist and not, the water guy, but do the firefighters have enough water right now to fight these kind of unbelievable blazes?
Yes, because the last couple of years, Alex, they've had above normal precipitation in California. Right now, they're running below normal because we're in the La Nina. But they've been able to do water missions with helicopters and dumper planes on the reservoirs. And sometimes, if I'm not mistaken, they can even go out to the Pacific and do pickups there. The winds may be an issue in the Pacific right now because it's even gusty offshore. I'm looking at Catalina Island right now, reporting some gusts between 35 and 40 miles an hour.
All right, Rob, thanks so much for joining us. Rob Cowlerland, he's a Bloomberg meteorologist giving us the latest from those fires in the Los Angeles area. Looking at the markets here, not a ton of movement here. The S&P is pretty much unchanged on the day. The Dow's off 60, 70 points. The Nasdaq's off 20 points. Let's check in with Norma Linda. She covers the equity markets for Bloomberg News. She joins us here in our Bloomberg Interactive Broker Studio. Nora, what stocks are you looking at today?
Well, I'm keeping an eye on eBay, my goodness.
eBay.
Or
eBay.
eBay. I mean, it sounds
so
about right
it
to
works.
me. That's ticker EBAY. Those shares are seeing the biggest intraday advance since 2020, and they're hitting the highest level since 2021. Now, this is after Meta said that it will publish eBay listings on Facebook Marketplace in Germany, France, and the US. And this is all, of course, to comply with that antitrust order that it's received from the EU. That came with a 798 million euro fine. And this is a really big push, especially as we're thinking about the idea of antitrust and the fact that Facebook, when you go to Facebook Marketplace, you're not going to see an eBay listing, nor will you see any sort of listing or ads from their competitors. So this is a really good boost for eBay, and we're seeing shares up as much as 13% on this news.
Interesting. See, you do e-buy on eBay. All right, you're also looking at Maple Bear, which is ticker CART.
Yes, AKA Instacart.
That's right. That's what I was like. I think it's, where do we get Maple,
Maple Bear always throws me for a loop.
It does, me too. It has no
We need to
connection in my
investigate.
head. Yeah.
Well, we're seeing shares gaining as much as 5.5%. That's the most that they've seen since October. And this is on the announcement of its addition to the S&P Midcap 400. And of course, we know that this is a good boost for a company's profile. It often leads to increased demand to be added to any sort of index. But Maple Bear's elevation to the index is a recognition of its stability and potential growth to Wall Street. So this is some great news for the stock as we're seeing traders bouncing and hopping into it.
Hopping into Instacart. I see that, but it's really Maple
I like
Bear.
it, right?
Yeah, I like it. All right, Nora, thanks a lot. Norma Linda joining us from Bloomberg News. Now, Paul was saying in terms of the equity market, it's really a non-starter today, but where there's still action is within the U.S. bond market. We may be quiet right now, but there's some buying in the front end after those initial jobless claims came in better than expected, and the ADP disappointed just a little bit. But nonetheless, calls for 5% on the 10-year. Tremendous. They're coming out fast and furious right now. The 10-year hitting that key level that Ira Jersey yesterday was talking to us at Bloomberg Intelligence. That is a key technical level. So let's check back in with Will Hoffman this time, Bloomberg Intelligence Senior Rates Strategy Associate. Okay, so if we get to like a 4.7, how do you guys see the 10-year evolving?
So 4.7 is about where we're hanging out right now. We think 4.74 is the close from early April. That's really going to be the big number, and particularly if Bloomberg Economics' NFP call for this upcoming Friday at 268,000 payroll ads is realized, we may see that 5% number here in a hurry. But the question is how long it sticks and what that does to the underlying economy. Rates up that high, particularly out the curve, are going to slow economic activity. It's just a matter of how long they stay there and how deep it goes. But for right now, growth is solid and yields are reflecting that. Prior conditions and embedded expectations were really weak coming into September. I mean, feels like forever ago now, but Powell saying, hey, we do not seek or welcome additional cooling in the labor market was a pretty striking quote. And now it seems like those labor market downside surprises have pretty much stopped. And the question is, do we see upside surprises from here, which PE has been flagging?
Will, how do you think the Fed is kind of digesting some of this, I guess, better than expected economic data?
Absolutely. So Powell, I believe in December, had a comment specifically to the rise in yields post, I think the low was September 16th, just prior to the September meeting. And he attributed it to growth. And frankly, a lot of that is absolutely the case. The question of how much of this move has been tariff rhetoric or policy uncertainty is absolutely a great question, but the vast majority of this move, as Ira and I have highlighted in pieces out late last week as well as early this week, it's been the economy. The economy was expected to slump, and it's been upside surprises, or I should say fewer downside surprises, and now some upside surprises in hard economic data, and that's been spurring yields higher.
Just some breaking news for you. Canada's Finance Minister, Dominic LeBlanc, won't be running for Liberal leader. He just took the helm of Finance Minister since December of 2024 when Chrysler Freeman stepped down during much turmoil. So he will not be running for the head of the Liberal Party. Of course, if he did, elected. He would then be elected prime minister if he won. He will not be in the running for that. What's interesting, though, is how much I've read, Will, about why long ends are moving higher. You can make an argument, you look at forward inflation expectations. They haven't really moved that much. So is it really about inflation? Is it really more about the budget deficit? Is it about growth concerns? Where do you guys sit on that?
So, I mean, if you look at the local lows in about mid-September, since then, 10-year, and we'll just speak in 10-year yield space for simplicity, but 10-year break-evens have risen, but they were from an incredibly low point, and I'd call that more normalization. I believe it's mid-30 basis point move, but all the real move has been in real yields. No pun intended, but and those tend to reflect volatility, budget deficit, as well as growth expectations. But given the move in SOFR future space of the terminal rate pricing, it appears its majority of the move is economic strength and maybe a little bit less some of the uncertainty that we're seeing in forward policy guidance from the fiscal side of things. But until there's concrete news or plans, the market may continue to react.
Hey,
go ahead.
So, Will, just real quickly, the real yield, Tom Keene likes to look at the real yield, 2.29%, the highest since November of 23. What does that tell us?
Yep. It tells us growth expectations, realized volatility, and deficit expectations are not falling. In fact, they've normalized pretty substantially. The question, I think, from here is, does growth continue to stabilize, or does it reaccelerate? In the latter case, I think we see a pretty material bear steepening. It's not our base case for the economy or yields, but if the Fed holds off with maybe one more cut next year and growth continues to move upwards, we will see the curve steepen from here. It's just a matter of when and how much.
All right. Well, thanks a lot. Really appreciate it. Will Hoffman, Bloomberg Intelligence Senior Rates Strategy Associate. But Paul, it feels like the takeaway at this point is that yields are high. Like,
yes,
we could maybe have structurally broken a trend.
Yeah, absolutely.
So if that's the case, how quickly do you need to reallocate or rethink how you're structuring your 401k,
right,
how you're thinking about borrowing money, how you're thinking about your mortgage refinance or getting your 30-year fix?
Yeah, I mean, it's higher for longer. It seems like inflation seems to be stickier than folks thought. So you're right. That's how this might have to stomach a 6% or 7% mortgage if you want to go out and buy something. The good news about talking to Will Hoffman and getting a good call from Will Hoffman means we don't have to talk to Ira Jersey anymore.
Oh,
see?
yeah. He's kidding.
Kick him to the curb.
All right, coming up, we're going to talk about carbon capture and making it like a real business where you make money with CRC resources. We'll get to that. Plus, Mike McKee, Bloomberg International Economics and Policy Correspondent, joining us as we head into the Fed Minutes at 2 p.m.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. In the S&P 500, you had 9 of the 11 major industry groups lower right now. The standouts, though, information technology, that's home to NVIDIA. That's up 0.3%. And it was consumer discretionary. It looks like that's turning around. Tesla was higher earlier, and Tesla shares, they've now turned lower. They're down 0.5%. A pair of reports on the labor market today. The news kind of mixed. ADP reporting business hiring slowing in December. Job cuts, meantime, they moderated, with weekly jobless claims falling to the fewest in almost a year. And still focused on yields. The 30-year 492 right now, up just 1 basis point, so a little improvement there. The 10-year, that's actually 468, and the 2-year, that is down just about 3 basis points at 426. Bank of America creating a group of specialists that cater to the ultra-wealthy, looking to capitalize on the growing ranks of super-rich clients. The number of individuals more than $10 billion in assets, they say, is, in their words, rapidly growing. S&P 500 down 25 points, 5884 in the index. The Dow 166 points lower, and right now the Nasdaq 100 down 97 points. That's a steady decline of 0.5%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash, and it's brought to you by IBKR. Takes me a second to open this up. IBKR, with the Interactive Brokers Forecast Trader, you can trade your views on key political, economic, and climate indicators. Visit ibkr.com/forecast and get started today. Alex and Paul.
All right, thank you so much, John Tucker. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our Interactive Broker Studio right here in Midtown Manhattan. You can also check us out on YouTube as well. So here is, our next guest is an energy CEO. The company is CRC. It's California Resources. Now, this is an oil production company. It definitely has that. But it's also one of the first companies to get a permit from the government to store carbon into rock, a key part of how to decarbonize our society. You got carbon, you put it in a rock, it goes away from the environment. It also recently closed a deal to become the largest oil and gas producer to capture CO2. Let's get more on this. Francisco Leon is CEO of CRC. Francisco, Paul's going to ask it, so I'm just going to go first. What do you do?
Good morning. Good morning. So we're great intro. Thanks for having us. California Resources does energy in California, oil and gas, as you said, power. So we take care of the present needs of Californians in terms of providing these products that make our lives better. But we're investing in the future. We're focused on the what's next. And the what's next is to have a world that's decarbonized, that has a world that has lower emissions. And we're investing in technologies that get us there. And as you pointed out, we received a permit from the Environmental Protection Agency after 3 years of discussions, data sharing, modeling, to be able to safely capture, transport, and inject CO2 from industries, critical industries that we have in the state, power, cement, refining, and store them safely downhole, creating a closed loop, effectively ecosystem that has the same great products but without emissions. So we're really excited. It's a big time. It's a long time coming. Big day for California Resources, but also a big day for California that wants to lead the nation and the world in environmental leadership. And we're so happy to be the first, and we're ready to get to work.
So just for the lay people like me, how does carbon capture and storage work? Where do you put this carbon?
Yeah, so think about it. So we, as being an oil and gas company, we extract products from the earth and oil, gas, in these reservoirs that have been created for thousands, millions of years that have these deposits are great also container storage tanks, what we call the vaults, to be able to store things back in there. So as we extract natural gas, we use it for heating, for power generation, for fertilizer. One of the byproducts is as you burn the gas, as an example, it creates emissions and CO2. So what we're planning to do is basically going the reverse, going back and taking back the CO2 that's been burned from the gas, capturing it from the point source. So we would go to factories in manufacturing, and rather than having the smokestack that goes up into the atmosphere, we're going to close that loop, and we're going to bring that CO2 back to where we started, back into the reservoir and fill it back up.
Francisco, is this just from your operations, or have you struck deals with, as you mentioned, hard-to-abate industries?
Both. So we will take care of our own emissions. We have power generations, and so we'll start with ours. But we struck many deals now over multiple months with industries hard to abate across the board from other power plant generations. We're also talking clean hydrogen, ammonia plants. We're partnering with another public company called Net Power. So it's about making industry better and to better serve our community. So it's across the board, our emissions and others.
To that point, how did pricing come about? Like, if you can tell me what pricing is, that would be super. But if you can't, can you tell me how hard it is to come to a price where you'll capture it and store it, and the companies will be willing to pay for it?
Right. So it starts with really there's government incentives. The Inflation Reduction Act has a 45Q code that gives you an incentive. We also have a low carbon fuel standard in California that allows you to stack the credit. And we also pay a carbon tax in California. So if you look at, there's a bigger pie in California than the rest of the nation in terms of incentives or avoidance of tax that you can capture. So as you think about it, all these incentives add up to about $180 per ton of capture that you make. So then you have the ability to split that across the value chain from capture to transport to storage. We really lead with the storage. The subsurface is where our main expertise is. So roughly speaking, it's about a $50 to $75 per ton to store it on the ground is what we've been negotiating with all these counterparties. Yeah. And that allows us to have a model that has attractive returns. We partner with Brookfield. It's a model that makes money. It gets launched off the ground, allows us to make these big investments, and gives us the infrastructure type returns that actually could be also valuable for our shareholders. So the business is just getting started. We're entering into these partnerships, and the pricing model is starting to take shape. But that's roughly the amounts that we're charging the customers.
One more quick question, Paul. Okay, and then and then we can go. Do you keep storing it in the ground, or do you recycle it at some point? Can you reuse it?
Our plan is to have permanent storage. So keep it on the ground. We have monitoring devices, state-of-the-art monitoring devices to make sure it doesn't come back out. So our plan is to grab it from the atmosphere before it hits the atmosphere and keep it underground in our fields. Okay. So permanent storage.
Hey, Francisco, thank you so much. Really appreciate it. Congrats. Cool story. Francisco Leon, CEO of CRC. It's actually Chevron's hydrogen project, where you can sort of store hydrogen and then reuse it. So they're more of like the energy storage company. It's not permanent. You reuse it once utility wants that hydrogen back. Just wanted to clarify that.
Very good. It's a publicly traded company, too. All right, let's switch gears. Let's get back to some of the economic data out there. We've had some labor data. Non-farm payrolls are going to be Friday, but today we had initial jobless claims a little bit better than expected as well. ADP numbers, employment change a little bit lower than forecast. Michael McKee joins us, international economics editor for Bloomberg. He is down in D.C. Mike, what do you think about some of the economic data we've seen? How do you think our Federal Reserve is going to view some of this data? Obviously, the big focus will be on Friday's non-farm payrolls.
Paul, they're probably going to look through what we've gotten this week so far. There wasn't very much change in the ISM employment numbers. The ADP numbers never match up with what we actually get. And the jobless claim numbers are all kind of distorted by the holidays. So at this point, we're not getting a lot of useful signals on the labor market. But then we've heard from a number of officials at the Fed who've said basically they think the labor market is still in good shape and they're not worried about it. So we may may or may not see much of a reaction on Friday when we get the payrolls report, unless it is significantly out of line one way or another.
Are we going to know to what extent the Federal Reserve officials talked about President Trump's policy and tariffs potentially in the minutes?
Well, that's why you have to tune in at 2 o'clock.
Deep tease, Mike.
Big deep tease. That's the question everybody on Wall Street is asking, because there's a lot of confusion about what they meant in their summary of economic projections and dot plot for the year going forward, particularly after Jay Powell said some of them incorporated ideas about what Donald Trump's fiscal policies may mean for the economy, and some of them did not. So how many? Do we get an idea? How significant is the influence of thinking about Trump policies on their forecasts? That's the kind of thing that everybody's trying to parse right now, because they're trying to figure out, at least till we get a new SEP at the end of March, what the Fed thinks its path is going to be.
Hey, Mike, we were talking to Will Hoffman, Bloomberg Intelligence earlier, rates strategist there. You know, higher for longer, it seems like, out there in the Treasury market in terms of rates. How do you think the Fed looks at a 10-year at 4.68%?
Well, it is kind of working against what they have been trying to do, obviously. But for the Fed, they point out they don't control the long end. All they can do is influence the short end. So they're kind of helpless in this regard. The thing about it is they don't know, as probably anybody on Wall Street doesn't know, how long we're going to see this elevated increase in the long rates continue. Is this going to go away once we get some more specificity from the new president? When we get some new legislation from Capitol Hill, or is this something that's going to be built in and built on? That's the hard part at this point.
Yeah, hard part at this point, 100%. What do you think we're going to hear about growth ahead of jobs, right? Like how they're going to categorize that part?
Well, they've pretty much said that growth is going to be stronger than they had anticipated. In September, they were thinking we would get a fairly moderate fourth quarter, and instead it looks like we're going to get something close to 3%, maybe just below. And so they're expecting the economy to be stronger into 2025, which probably means a stronger labor market and a little bit more inflationary pressure. So a lot of what they've said about cutting back on interest rate cuts is a function of that forecast going forward, that they think growth is stronger than they had anticipated.
All right, Mike, thanks so much for joining us. Michael McKee, international economics and policy correspondent for Bloomberg News, joining us from our Washington, D.C. bureau. I will not be reading the Fed minutes, but Michael McKee will.
That's why you tune in.
That's right. And if there's anything important there,
so usually he's like, nothing to see here. It's a boring day. But he's kind of pumped about this one.
Yeah,
I know
this
Mike,
could be interesting.
I can tell you.
All right, we'll pay attention to Mike, whatever Mike has to say here. Looking at the rate space here, the 2-year off a couple of basis points, 4.26%. The 10-year pretty flat, 4.67%. So, we've got about 41 basis points of steepening in the curve. I'll just point that out because we went a few years where it was inverted when you looked at the 2s and 10s. So a change in the term structure.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, the major stock averages, they are pushing lower. You have 9 of the 11 major industry groups in the S&P 500 down. The ones that are up include healthcare, think defense, and then information technology. That is home, of course, to NVIDIA. NVIDIA shares right now, they're up. They're up about to 0.4%. Now, earlier today, we did break 5% in the Treasury market. That would be the 20-year. 20-year right now is at 4.99, I'm going to say. So just right around that 5% level. The 20-year, again, topping 5% for the first time since 2023, fueled by the inflation concerns and President-elect Trump's policies. Cameron Dawson at New Edge Health, meantime, says a stock sell-off may have further to go.
We are expecting higher volatility, a little bit more of a sideways chop. And the fact that the market traded below its 50-day moving average just suggests that maybe this corrective period that was started in December is still upon us. Markets aren't quite oversold yet.
Right now, the S&P 500, 14 points lower. That's down 0.25%, 58.95 in the index. The Dow Jones Industrial Average down 136 points. And the NASDAQ 100, 41 points lower. That is down 0.2%. Best performing stock in the S&P 500, that belongs to eBay. Those shares right now up close to 10%. Meta Platform is going to publish eBay listings on the Facebook marketplace in Germany, France, and the U.S. They're actually complying with the EU antitrust order. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Alex.
All right. Thank you so much, John Tucker. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. Let's get to one right now. Jonathan Palmer, Senior Healthcare Analyst at Bloomberg Intelligence. He has a great note out that takes a look at his 2025 healthcare tech outlook. All right. What's going to be the brightest spot? Let's do that.
Well, there's a couple. So it's healthcare technology and distribution. That includes a whole host of companies, everything from CVS and Walgreens to the drug distributors and then to all the healthcare technology names. And so there's some really idiosyncratic themes at work here. Pharmacies, the news is not so good. Distributors, it's very positive. In the world of tech, again, because these are all very idiosyncratic business models focusing on different things, there's pockets of very good, pockets of okay, pockets of not so great. My key themes are around the drug distributors and pharmacy. The drug distributors are doing very well. They've got great underlying fundamentals. There's more people taking more drugs. They've been utilizing their capital to buy what they call MSOs, which are management service organizations. Not to get too deep in the weeds, but these are companies that manage practices of like oncologists or other specialists. And really, that helps diversify their income stream and not make them, totally captive to the trends in underlying drugs consumption. So that's been a great trend for these guys. It's diversified them, and it's got a long shelf life here too.
Did the elections and the election of President-elect Trump and the Republican control of Congress, how's that going to impact healthcare? What's the feeling out there?
Yeah, so I think it's a wait and see. The President-elect Trump did not campaign on many healthcare issues, although obviously there's stuff swirling in the background. What we saw out of the last administration was some ideas around limiting PBMs. That never came to pass. There's a thought that maybe that will come back in this administration.
So these are pharmacy benefit managers.
These are pharmacy benefit managers. The big three are CVS Caremark, Express Scripts, which is owned by Cigna, and then United Healthcare. They own Optum Rx. And so actually in December, Senators Warren and Hawley introduced a bipartisan bill where they would ban these PBMs or managed care companies from owning pharmacies. We don't think there's very much chance of that bill passing, but it still points to kind of the rhetoric and saber rattling coming around out of Washington around some of these healthcare models.
So does that just mean a harder year for CVS, Cigna, and United Health, even if that kind of split doesn't happen?
Yeah, I think it's pretty unlikely that split comes to pass. But I think it points to the anger that a lot of people have, in the marketplace around healthcare and who they have to deal with.
Talk to us about the drug distribution business. Why do you like that business, and what are the names that
Sure.
right
So there's three big companies. What used to be called AmerisourceBergen, but it's now called Cencora, Cardinal Health, and McKesson. I mean, these are really great fundamental businesses. They control 90% of the U.S. drug distribution. It's not just logistics. I think it's simplistic to think of that way, that they just get the drugs and they take them from the manufacturer's warehouse to the local pharmacy. They've built a whole host of these service businesses around all of that. And that's where the future of those businesses really is.
What does that mean? So why isn't it just the logistics? So paint us a bigger picture.
Yeah, so I talked about it before, those MSO businesses. McKesson owns what they call U.S. Oncology, which is this massive network of oncologists. It's about 20% of the community oncologists in the country. And so that's really like a captive portal of business. There's all those oncologists order through McKesson. McKesson manages their EHR. They manage the billing. So it's actually really branching out outside of the pure logistics piece.
So healthcare, I'm looking at the S&P 500 up 23% last year. S&P healthcare sector kind of flattish. So what's the investment backdrop for just healthcare right now?
Yeah, I think it depends where you're looking. I mean, I don't focus in therapeutics, so I'm probably not the best person to ask about the biotech world or pharma. But outside of that, we've seen a lot of pain in the managed care world around Medicare. Most of those companies, particularly CVS in particular, have suffered because out of the pandemic, we've seen a lot of utilization of care. That's caused margins to collapse in Medicare Advantage, and that's one of the big growth areas in the managed care world. So managed care is a little bit of a slog right now. Outside of that, in let's say like life science technology, those companies have been dealing with poor demand from pharma and trouble in China. China hasn't been the best market for them for a while. And then on the more like, let's say, service side or technology side, I think it depends on where you play. DTC models were very popular, things like telemedicine and virtual care during the pandemic. Those have come back. But some of the survivors, the Hims and Rose, which is a private company, are seeing a lot of uptake around GLP-1 drugs. And so it's a little bit hit or miss depending on where you're playing.
What do you think the GLP-1 drug forecast is for this year?
High.
But will insurers finally cover it?
Well, I think that's the big debate. I mean, around who's going to pay for what, and it's happening on the commercial side. Employers. It's happening in Medicare and Medicaid. The demand is clearly there. It's just what can people afford to pay, and so there's a whole host of business models that have kind of arisen around. Not circumventing, but working outside of the pure insurance. These are the things like Hims, which I just mentioned, where if you just want to pay out of pocket, you're going to get yourself a GLP-1.
There was a whole compound thing, right? Wasn't there a compound one that you can have
that's
a
the
lot
Hims
cheaper?
and hers and all that kind of. That's where you see, I think, all the ads around.
Yeah.
So when drugs are in shortage, which many of these GLP-1 drugs were, the compound pharmacies can meet that demand by using kind of generic compounded drugs.
Is AI in your space at all?
It's everywhere.
I'm sure your research director said, write a research report on how AI is impacting your industry.
You have to have it so you can search it and find it. Yeah.
It's everywhere. I mean, my view is that a lot of there's probably going to be a handful of killer apps, things around voice and ambient listening. We've seen some of that. Microsoft bought a company called Nuance a few years back. I'm sure there's others. A lot of it, I think, is going to be table stakes, particularly for the stuff that's back office, for payment processing, claims adjudication. Everybody's going to do that. So it's definitely top of mind for most management teams here.
Will I ever be able to call and use an automated system to talk to a doctor? Will that ever work? TBD on that.
Yeah.
I don't know. It's not pretty. Jonathan Palmer, thank you so much. Senior healthcare analyst at Bloomberg Intelligence. I've been trying to get results for a procedure I had. I can't get it. I'm like, what is this? This can't be.
It's in your portal. Isn't it in your portal?
No, but I'm not a doctor. I can't do the speaky of the doctor thing.
Oh, I see what you're saying.
It's whatever. Anyway, coming up, we are going to talk about the dollar. So I mentioned, we talked about this earlier. Markets Live had a great piece out, surveyed what to expect in 2025 from tons of customers, and they talked about the dollar dominating. We've already seen that. We've seen the fallout when it comes to the yen. You have the pound also today taking a hit. You have the yuan as well. So we'll talk more about the dollar as we kind of tread water and look forward to those Fed minutes coming at 2 p.m. Eastern Time. This is Bloomberg.
listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so search Bloomberg Podcast on YouTube.com. Is there a bear case for the U.S. dollar? That's what I ask FX strategists whenever we check in. I just don't see it. I mean, whether it's relative growth of the U.S. economy versus other parts of the world, whether it's interest rate differentials, it just seems like there's no credible bear case for the dollar. Not that that's a bad thing, but it depends on kind of who you are. Christina Aquino joins us, managing editor for Markets Live, Bloomberg News. She joins us here in our Bloomberg Interactive Broker Studio. Christine, I know you and your colleague Mary Nicola out with a note here, a story talking about the dollar. What's the key points for you and the U.S. dollar here?
Well, Paul, you hit the nail on the head. It really is about interest rate differentials, right? And I think on that front, the U.S. is really exceptional in that I think rates here are going to have to stay elevated because of various reasons. But if you look across the globe, there's more likelihood that the European Central Bank, the Bank of England, more likely to ease by the end of the year than the Fed at the moment.
See, when everyone is so consensus, though, we get worried. So is there a bear case for the dollar that we could suss out? Like, is it a tariff situation?
Yeah, well, I mean, Alex, you raise a good point, right? If the positioning really gets too one way, that's when it starts getting a little bit worrying, and the dollar probably becomes more vulnerable to kind of sudden shifts in sentiment. And the tariff conversations probably could be something that creates that sudden shift in sentiment, right? But I think even there, the consensus is that in the short term, tariffs would potentially give the dollar another boost because the expectation that it's going to be inflationary. I think it would be kind of a longer-term story when it starts to perhaps take a toll on the U.S. economy as opposed to just kind of harming its other trade partners. That's probably when we can start thinking about the bear case. But that might not be until the second half of this year.
The other side of the smile, right?
Yes.
Yeah.
Exactly.
And there's also this economic exceptionalism that we've talked about for a while here in the U.S. And you guys have a great chart just looking at earnings growth for the U.S. versus other areas of the world and GDP forecasts. And the U.S. is kind of right at the top of both of those, suggesting, that again suggests that the dollar should be strong.
Yeah, absolutely, Paul. I mean, what we really have here is a Tina story, right? There is no alternative. And even when you look at just that chart, what really speaks to me is the fact that the drivers of earnings growth in the U.S. really far outpaces what we see from any other equity market. Of course, that's thanks to the very big tech sector that we have here that's driving a lot of those gains. That will be something to watch, I think, for the earnings season coming up just now, because a lot of signals that can come from there.
All right, something very cool. I did this by mistake. I was looking at this chart in this story, and I fat-fingered a little click on my mouse. It actually is interactive. You can make it go sort it by fastest growth to slowest growth, and that's really cool. I didn't know you could do that anymore in Bloomberg. This is Matt Winkler, nice job. I need to get out more.
He anchors 5 hours of radio. Let him get a little of excitement.
The charts are interactive in the Bloomberg news stories. Something new for me.
There we go.
There we go.
But the other side of the dollar is what happens to other currencies, and that brings me to Japan, right? And sort of if we see continued hikes from the BOJ. And my whole issue with that is, like, can they hike enough to offset the cuts, right? Like, how much do they have to hike to really move the needle when it comes to dollar yen?
Yeah, absolutely, Alex. I mean, a very good question, especially because when you look at the commentary from the Bank of Japan, they really seem so reluctant to want to keep raising those rates, right? Because, again, what we're seeing in Japan, they've been in such an easy monetary policy regime for so long, and it is not a central bank that moves quickly, right? And so I think it really take a lot for the Bank of Japan in terms of rate hikes to offset what we're seeing in terms of cuts around the world. And even then, I don't think they're really going to want to do it fast. I think they want to be slow and steady, and they want to be very prudent about it. And that's why I think, for the foreseeable future, there really is no challenger to the dollar at the moment.
The question is there any upside to the dollar? If the strong dollar is kind of the consensus trade, is there any upside? What are folks saying there?
Yeah, good question, Paul. I mean, I think, further gains definitely possible. That's the expectation of a lot of people in the markets. That's something that was reflected by our Markets Live Pulse survey the other day as well. In terms of how quickly it can get there or whether it's going to be a straight line, I think that's where the variation is going to come from. We were looking at positioning, we were talking about this, right? It is starting to look a little stretched. There is a potential for a bit of a pullback there, and so not necessarily kind of soaring gains right away. But if we're just kind of looking at the general trajectory of the dollar, I think if you're a betting person, you're probably more likely to bet that it's going to be higher by the end of the year than it is lower.
And that's the thing is, like, what does it break? And how does it break it, right? Like, we see the turmoil in other markets. I think it was I can't remember if it was Mike Wilson or Lori Calvasina. I think it was Mike Wilson and Morgan Stanley said that, we're getting to the point where the dollar is going to start to impact your earnings and those multinationals. Like, we got to keep watching that when it comes through earnings season. All right, thanks so much, Christina Kino. She heads up Bloomberg Markets Live. It's a great piece. You can definitely check it out. They do great work like that as well. But, it's not just U.S. yields here, Paul. You got UK 10-year yields highest since 2008, and that's higher than the Liz Truss debacle that we saw.
Right, exactly right. And just looking at the euro for those traveling over to Europe and thinking about the strength of the U.S. dollar, we're 1.03, very, very close to parity. I know for a lot of people, a lot of traders, a lot of strategists, that's kind of a key factor.
The year that I'm not going to Europe, just check that out. Well, for our listeners in the U.S., here's a reminder for you. You can listen to the U.S. via satellite radio on Sirius XM, channel 121. Access to the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM, channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Wednesday, everybody. Happy Fed Minutes Day. Happy Hump Day. I'm Alex Steele here with Paul Sweeney, John Tucker. This is Bloomberg Intelligence Radio. We have a great hour lined up for you. We'll check in with the Supreme Court as Trump is asking the court to halt January 10th hush money sentencing. Greg Storr is our Bloomberg court reporter. He'll join us in just a moment. Nathan Dean, also of Bloomberg Intelligence, will join us, and he's senior policy analyst on what to expect out of President-elect Trump and tariffs as well. Plus, Dave Aspel is co-CIO of Mount Lucas Management. We'll break down what to expect from commodities, bonds, currencies, and managed futures as well. And Eric Edelberg, a Bloomberg Intelligence chief mortgage-backed security analyst, will be telling Paul when he can refi.
Oh, boy.
No time soon. This is my guess. But let's kick it all off for you right now. Here's a business flash with John Tucker.
All right, guys. Major stock averages. I'm going to say kind of groping for direction right now. The S&P 500. The leaders include Microsoft, Apple, and NVIDIA. The laggards belong to Meta, Advanced Micro Devices, as well as Johnson & Johnson. Now, not too far in the background for equities, you have, of course, treasuries, and we did breach 5%. This is on the 20-year. Right now, just about 5%, 499.6 on the 20-year. Meantime, Liz Ann Saunders at Charles Schwab says there may be a reckoning ahead for stocks.
So we may be getting to a point where there's a realization that in order to actually hit that earnings growth consensus, it does require record or near record profit margins. That's what I would pay close attention to during fourth quarter earnings season.
And Fed speak today ahead of the minutes. Fed Governor Christopher Waller says he believes the inflation will continue to cool toward the bank's 2% target, prompting his support for additional interest rate cuts this year. Options traders, they're betting the S&P 500 is going to move roughly 1.2% in either direction ahead of the employment data, the jobs report Friday. And, of course, the market's set to close tomorrow in observance of a National Day of Mourning for former President Carter. S&P 500, 5 points lower, 5902 on the index. The Dow Jones Industrial Average down 29 points. The NASDAQ 100, 31 points lower. That's down about 0.2%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele and Paul Sweeney, we are live here in the Bloomberg Interactive Brokers studio. We're streaming live on YouTube as well, so head over to youtube.com, search Bloomberg Podcast, and that's where you'll find us. As John Tucker's just reporting, a little bit of red on the screen, not much movement there. Let's see where the action is under the hood. We can do that with Nora Melinda. She's an equities reporter for Bloomberg News, and she joins us here in our Bloomberg Interactive Broker studio. Nora, what are you looking at?
Well, let's take a look at eBay. I mean, this is a company that we are seeing rising this morning, seeing its biggest advance since 2022. And this is after Meta Platforms said that it'll publish eBay listings on Facebook Marketplace in Germany, France, and the United States to comply with an EU antitrust order that it received that also came with a 798 million euro fine. Antitrust has honestly felt like the name of the game for me. I feel like as the past 12 months, we've been hearing about so many companies grappling with this issue. But here, I mean, it's really just trying to make a space for other competitors to be able to still promote their listings on Facebook platforms and it not being completely owned by Meta.
Do you guys do eBay?
I'm not an eBay user.
No. John?
No.
Yeah.
Okay. I know people that have bought cars.
What?
Planes.
A car?
Planes. Planes on eBay.
Oh my goodness.
Yes. And then you drive down to Florida to pick it up and fly back.
And it's trusty.
Not kidding.
Doing okay?
Well,
I want to get that thing inspected maybe first.
Yes.
Well, it probably comes with papers, right? I mean, there has to be some kind of protection, right?
We surely hope so.
All kinds of stuff on that thing.
Oh my goodness.
I just bought warrior cats for my daughter on eBay because once they're discontinued, it's like impossible to get. It was a whole
Do they come
Santa
with papers?
thing, and what?
Do they come with papers?
The warrior cats, the little figurines.
She loves these warrior cats.
Oh my god, yeah! I can't wait till I get to sell them for $500.
This isn't
a
Roblox.
piece. No.
Okay.
I mean, they have it on Roblox.
Two different things.
Yeah, but warrior cats are on Roblox.
All the kid things.
Yeah.
eBay.
Okay. Anywho.
52-week high today.
There we go. Okay, let's go to quantum stocks. I thought we were just focusing on AI stocks, but now quantum computing stocks are also on the rise. What's going on here?
So we're looking at quantum stocks today. We have an NVIDIA CEO. He said that we are years away from actually seeing very useful quantum computers, that's likely decades away. It could take 20 years for useful quantum computers to be developed. So we're seeing a decline in shares like Quantum Computing Inc. We're seeing IonQ. Those shares are down for the worst day on record. They're plunging 47%. That's ticker IONQ. And so, I mean, this is not what anyone wants to hear, especially as we're thinking about NVIDIA, a massive company, and everyone really does look to the CEO for what he has to say on the industry. So we are seeing that subgroup selling off this morning in trading.
All right, and last up, Instacart, Maple Bear.
Quick flick at that stock. We're looking at Maple Bear, as you said, aka Instacart. That's ticker CART. Those shares are gaining as much as 5.9%. That's the most since August. And this is after it announced that it'll be joining the S&P Midcap 400. And of course, this will be a great boost for the company's profile. And it'll also just lead to increased demand. So its elevation to that index is a recognition of its growth. But we'll have to see how Wall Street takes it after it's up on the index.
All right, Norma Linda, thank you so much. We appreciate that. Norma Linda, she covers the equities for Bloomberg News. A listener writes in and says, our new photos are online, and I guess I'm not sure on the broadcast. So just letting you know.
I don't remember getting one.
We had some photos taken.
I don't remember having one taken. Okay,
Tom Keenan and Tom Keenan and I had them taken.
Oh.
Some new.
And you think we care about that because?
Well, I was just wondering if you guys had photos taken.
I don't know, but I'm going to go.
1993.
I don't know, Paul. I still see you, and you're looking like you're 25.
Okay.
Not that you don't look like you're 25 now.
Yeah,
Maybe
exactly,
like 30.
exactly. All right, lots of news flow here today, one of which involves the Supreme Court. President-elect Trump asked the Supreme Court to halt his hush money sentencing. To get the latest on that, Greg Storr, he is a Supreme Court reporter for Bloomberg News. He's in Washington, D.C. Greg, what do you think the odds are that the Supreme Court will even hear this case?
Well, they're not non-existent, at least when it comes to halting the sentence, which is what Donald Trump is asking for right now. So one of the things he's saying in this filing is there is this notion that the Supreme Court reiterated back in July in that big immunity case that when we have an issue like presidential immunity, that that gets resolved before lower court proceedings go forward. And Donald Trump is saying, at a minimum, let's put the lower court proceeding, namely my sentencing, on hold while appeals courts consider this immunity question that I'm arguing. And if that's what the Supreme Court does, that almost certainly means Donald Trump won't be sentenced anytime over the next 4 years.
So does that mean that it picks it back up, sentencing picks back up, like come 4 years later?
You know, I haven't thought it quite that far along, but it would certainly derail it in a major way. There's also the substantive arguments that Donald Trump is making, which is that putting aside the timing of the sentence, that I am immune from these charges. Now, these are charges stemming from hush money payments he made to Stormy Daniels, and he was convicted of 34 counts of hiding what he was doing. And what Donald Trump says is that a lot of the evidence, or at least some of the evidence that prosecutors used, involved my official acts as president, things that I was saying on, say, my official Twitter account, where I'm communicating about matters of public concern. So what Donald Trump is hoping to do is basically halt the sentencing right now and then ultimately win a ruling on that immunity question, which would essentially knock out the charges.
What's the smart betting money thinking here? Which way will the court go?
I'm not going to bet on this one. This is, of course,
I could go to DraftKings or some betting site today. I'm sure I can get odds.
Probably.
This is a court, of course, that ruled for him in a very big way in July when it derailed the case that accused him of trying to overturn his 2020 election loss. The court conferred very sweeping immunity on presidents there in a 6-3 ruling. And importantly, in that ruling, they said you can't even use official acts as evidence of things that a president might have done outside his official capacity. So with that as a backdrop, Trump certainly has a Supreme Court that's going to be very receptive to what he's arguing here.
Just one more quickie before you go. If he is sentenced, what does that actually look like when he then becomes president? Like, what is that?
Yeah, well, one thing it will not mean for sure is prison time. That is something that Judge Merchan has ruled out. So there's not that. It will involve, a certain amount of continuing process, no doubt. Undoubtedly, Judge Merchan and appeals courts, if it goes beyond that, would be sensitive to the notion that this is not an ordinary defendant, even though he would be a convicted felon, and that the president does have duties, and will try to find ways to limit the intrusion on the presidential duties.
All right, Greg Storer, thanks a lot. Really appreciate it. He's a Bloomberg senior Supreme Court reporter joining us on President Trump trying to delay the hush money case sentencing with the Supreme Court. No surprise, guys, we got another headline today about tariffs and the process in which President-elect Trump may or may not use tariffs going forward. So I want to get the real deal here with Nathan Dean, senior policy analyst at Bloomberg Intelligence. I mean, you cover this for a living. When we get continued trickle reports, anonymous reports in the press, what do you think this amounts to when it comes to action from Donald Trump on tariffs?
Yeah, so, obviously we go back to the idea that this is the soap opera portion of the White House. And what I mean by that is you have a pro-tariff crowd, but you also have an anti-tariff crowd. And, they're going to be continuing to push for their positions, but ultimately it's President Trump that's going to make this decision. Now, we do anticipate that tariff decisions are coming. Most likely you are going to see an executive order after January 20th directing the United States to implement these tariffs. But, there are certain ways that he can do this immediately, but there are other ways that he can do this via requiring the Department of Commerce to actually conduct a study. And that's where we think that it's more likely going to be the latter portion. So the language of this executive order could say that the Department of Commerce needs to go conduct a study, and they'll come back within 2 to 3 months. But, President Trump does have the authority to turn these tariffs on day one, so it's certainly a real risk/opportunity. But we ultimately do believe that these tariffs are a negotiation ploy, for President Trump being a transactional president, and he'll want to see those negotiations to continue to play out rather than we'll see an immediate action to tariffs. But anything's on the table.
All right, Nathan, your friends in Congress, they're back in town. Presumably the Senate needs to start confirming some of these cabinet positions. A, when does that start? And B, which ones are expected to be contentious?
Yeah, so the hearings are actually going to start next week. Obviously, I think Pete Hegseth for Secretary of Defense is out there, Senator Rubio for Secretary of State. So these confirmation hearings are going to be beginning next week, and then they'll go through the next couple of weeks. When it comes to actually after January 20th, the idea here in Congress is that the national security picks are going to try and move quicker than others. But you need Democratic support in order to move these picks fairly quickly. So somebody like Senator Marco Rubio, as Secretary of State, he's probably going to get that Democratic support. Wouldn't be surprised to see him go through fairly quickly. Same with Elise Stefanik as the UN ambassador. However, there are going to be more contentious hearings, Tulsi Gabbard, RFK Jr., and so forth like that, that these hearings may take time because the Democrats won't agree to move these quicker. So I think these hearings are going to continue throughout the month of January, probably into early February, and then you'll see. But I would just remind folks that, because the Republicans only have a 53-person majority in the Senate, they can only afford to lose 4, or else that nominee is going to be sunk.
So here's a completely unfair question to ask you. And as a reporter and anchor who has to manage all these headlines, to you, what is actual news versus what's just noise that you just say, forget about it, I'm going to focus. What is news?
So, news is obviously if President Trump were to make a statement saying, look, I'm going to turn these tariffs on day one, certainly has the power.
But hasn't he said that? Like, is there something more concrete we can look for?
I certainly would think that if he were to say the negotiations have ended, for example, let's just pick on Denmark, for example. He said that he wants to, negotiate over Greenland. He wants to potentially put on tariffs on Denmark as a result of this Greenland dispute, if you will. If he puts out a tweet and says, on January 20th, I'm turning on these tariffs because negotiations have failed, I take that as a real risk/opportunity. But, with everything President Trump says, you also have to keep in mind what is the process that he's going to use to implement his goals. When it comes to executive orders, most of it is symbolic in nature. There's a little bit more power there for immigration, trade, national security, energy, domestic production, if you will. But for anything that relies on Congress, like legislation or the DOGE committee or anything like that, you just go back to the time-honored tradition of Washington. It's just going to take a lot of time to put into place. And as a result, actionable news, you may have to wait until actually see what vote counts are and so forth.
Does the DOGE, is that a thing really in Washington? Do people taking it seriously?
Nah, I think certainly people are taking it seriously from the standpoint that Elon Musk has a bully pulpit, and that Elon Musk can certainly drive changing of behavior in members of Congress. But I also just remind the Department of Government Efficiency is not a U.S. department. It's not actually put in the place of the U.S. government. And so any recommendation that comes out from the DOGE committee has to be implemented by Congress, and it has to be largely implemented with Democratic support. You would need 7 Democrats to go with it to avoid being subject to a filibuster. So I would just say that, there's going to be a lot of ideas and so forth, but, if you want to cut $2 trillion from the U.S. budget, you've got to go after mandatory spending, and that's the third rail of U.S. politics. Most people are, Speaker Mike Johnson has already said he's not going to touch Social Security, Medicare, Medicaid, and so forth like that. So I think a lot of it is just going to be directionally goals, but a lot of it also is going to be at the whim of Congress to implement it, and that's where I think the DOGE recommendations, if you will, are going to slow down.
Which, leads us back to, what is news in this new era? Is U.S. buying Greenland news? Legit? Is this something that could happen? How would that even work?
Well, I go back to the tariff argument. When he spoke with John Micklethwaite, the editor-in-chief of Bloomberg News and Bloomberg Intelligence, he said tariff is his favorite word. And that's certainly that you have to take into account, that this is something that he wants to do. But if you have to look at the negotiation ploy of these tariffs, in this case, Greenland and so forth like that, if there's an opportunity that you can give him a win, then he may say, okay, great. I'll take that win. For example, just today there was reports that he's going to declare a new economic disaster program to implement these tariffs. This is something that he flirted with back in 2019 with Mexico. Mexican representatives came up to Washington, met with the White House. They talked about remain in Mexico immigration policies. They came to an agreement, and those tariffs never actually came to fruition. So if you look at the process of how this works, President Trump puts out a statement. There's a reaction in the news. We have to deal with headline risk because that's a real risk/opportunity for the markets. But then you have to look at the process of how it plays out, and then you should get at least a 2 to 3, 4 week, maybe a month window in terms of how that will ultimately impact your investment, your sector, or your company.
All right, Nathan Dean, thank you so much. We appreciate it. Nathan Dean, Senior Policy Analyst at Bloomberg Intelligence, one of the few reasonable people in Washington that I've found. that I understand and all that kind of stuff down there. Keeping everything straight as it relates to some of the policy proclamations coming out from various politicians in Washington. Just a quick glance at the markets here. No real change for the stock indexes. S&P 500 pretty much, it's down about 0.1% of 1%. Same for NASDAQ, so not a lot of move there. We will call out Bitcoin. It's off 1.6% here today, just below $95,000 per token. Was that 100,000 just a day? $1,000 per token was that 100,000 just a day or two ago. So the volatility continues there. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. We did hit 5% in the Treasury market. That was for the 20-year. Right now it's at 4.98. And yields do continue to weigh on risk assets. The major stock averages right now, they are lower to little change. And ahead of the release of the Fed minutes, that comes this afternoon, the Federal Reserve Governor Chris Waller says he believes inflation will continue to cool toward the central bank's 2% target, and that prompts his support for additional interest rate cuts this year by the central bank. Right now, we have the S&P 500 down 2 points. The Dow Jones Industrial Average down 8 points. The tech-heavy NASDAQ 100 down just 5 points. Among the data we got today, U.S. mortgage industry data showing demand for new loans dropping to the lowest since last February, as the rate on the 30-year mortgage rose last week to 6.99%. Also, some mixed data on the labor market. Payroll processor ADP reporting business hiring slowed in December. The Labor Department says weekly jobless claims dropped to the lowest in almost a year. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash, Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele and Paul Sweeney, we are live here in our Bloomberg Interactive Broker studio. We are streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcast. I think one of the attributes really over the last couple of months, couple of quarters, has been strong dollar, higher yields despite the Fed cutting rate. So it's just been really a reflection of U.S. economic exceptionalism relative to a lot of our trading peers around the world. One of the questions is, how do I manage the volatility around all that stuff? Dave Aspel joins us, co-CIO, Mount Lucas Management, located in Newton, Pennsylvania. Dave, thanks so much for joining us here. Again, a lot of folks are marveling at the continued strength of the U.S. dollar. How do you guys think about that? How do you guys trade around that, if at all?
Yeah, thanks for having me on. Yeah, I think you said it exactly right at the start. You know, it's a story of U.S. exceptionalism everywhere. The U.S. is clearly doing better than Europe. It's doing better than Canada. It's doing better than than the U.K. And I think some of that is the leftover or the continued strength due to the policy goals and the stimulus that we've seen. And then there's definitely a Trump bump in forward activity, I think. And for us, we systematically trade in all of these markets, in fixed income markets and currencies, and continued trends for us has been excellent. It's one of the only places you can get short exposure to the fixed income markets where you're benefiting from higher yields, and same thing from currency markets. So this type of volatility is really good for these strategies.
I mean, fair enough. Where do you see the most volatility? Yields, commodities, FX?
The most volatility, that's a great question. I think being British, I've kind of got a bit of a home bias, but I'd say it's the great British peso again today. You can see the pound's getting whacked. Yields are starting to get a little bit out of control. So I think the dollar and yields, particularly in the UK and Euro area, I think that's where we're seeing the most volatility today. The pound's at, I think, at multi-year lows. I think you're almost hitting 5% in 10-year gilts.
So, Dave, just explain to us kind of the trading strategy you guys employ at Mount Lucas.
Yeah, so we run systematic trend following strategies. They're one of the sort of the older types of alternative strategies out there. Generally, they do well when volatility in markets increases. And what we're doing is we're not trying to predict where markets go. We're just following trends. So if things are going up, then we're long them, and if things are going down, then we short them. You can make it as complicated as you like, but at its root, that's what it's doing. So over the past few years, you've seen the dollar go up. So we've been long the dollar, and you've seen bond prices fall. So we've been short bonds. We do this systematically. We reevaluate positions every day. We do it in commodities as well. And what it is just, it's a way to get exposure to volatility in macro markets. And, what we're seeing going forward, particularly with the new administration coming in, is a more volatile world ahead.
I love that you said that. You're like, if it goes up, we buy it. If it goes down, we sell it. Like, thank you. That's very clear. Now I can understand. What are you doing in the commodity market right now? What trends are you seeing?
We've participated in the gold move. I mean, that's continuing to go up. I think there's a lot of uncertainty. I mean, it's partly a dollar trade. I think there's partly some geopolitical tension in there, as other countries have been, I guess, either stockpiling gold or trying to move out of the US dollar as far as they can. But we're seeing gold go up. We've been participating in that. Other areas of the commodity markets have been very different. Gold, some of the some of the energy markets, natural gas we trade in has generally been going straight down for years, and every now and again it gets cold outside like now and it goes up a little bit, but broadly there's loads of natural gas out there. So we're trading in the grain markets as well. Those have been moving around. The strategies did really well throughout the period in 2022 through the Ukraine-Russia war, where grain markets got very tight and grain prices went up a lot. And then the best way you solve high prices is with high prices. So what do people do over the next couple of years if you've got really high grain prices? They plant a lot more